The Breakfast Club. My name is Darren Hancock, and I'm the host of the show here today. And let's have a look at the markets for the 25th of October, 2024. Well, if you see where we're at right now, we're sitting right inside that new week opening gap, up at 24.84. Let's look on the daily chart here. I think we got the daily over here. Oh, this is the hourly, so we'll look right here. I do like the upside box I'm looking for is probably going to be somewhere around here. It's my upside area of interest right now. If we can get through that, and we get into the event horizon, somewhere in the middle between these two. We reach up into here. I'll be looking for a reverse anywhere inside here. If we start getting through this, then I'll be looking for these relative equal highs above us, and then eventually start pushing higher. But right now, that's my key level for looking to find out whether or not we're going higher or lower. If we just get a bounce off this level and turn around and start coming back down again, and we stay inside this large range, that's my key level I'm kind of looking for. So we'll see how that acts. We've just bounced off the consequent encroachment, so the lower level I'm looking for any type of reversal here back into this event horizon area here and rebalance this candle we just had for today or this last hour. And then yeah, I think we're going higher today. We're going to come back to go up. Let's have a look at Bitcoin. Yesterday I gave you Bitcoin in the upside objective. We hit it nicely. So those of you into Bitcoin, I gave this as the upside a couple of days ago. This was Thursday. That's where the box was. This is an hourly chart. We hit it, retraced off of it, took out the lows, back to the order blocks. Now we're getting a reaction off. I'd like to see, oh, we've got it already. This is more upside now. I want to see this level get hit today, and then these old highs get taken out. So I see upside on Bitcoin. That's nice. See how we ran through this after taking out these lows? We ran through it. We came back to it, tapped it right there. Also, we ran through this order block to the upside, came back, tapped it, and started going higher. So I like Bitcoin long to this today, or for the next hour or two. I like Bitcoin higher. Even the S&P, it freezes up here in this last 4 minutes, which it should. We get a return back down into this old high here. I'd like to see that continue going higher in the next couple hours. So higher today. NG, UNG. Greg, you caught yourself a nice tiger there. I like that. We got above the level that we were looking for. Closed above, came back, found support at it, and we're looking for higher prices, which is great. Now pull your fib on the range and look for 50%, 62%. If you can get above this candle here, we're going higher still. So I do like further upside on UNG, and I like further upside on now we're above this natural gas. We're on the daily on this one. So we did wick above that. I do like to see if we come back inside That would be a lot of levels, man. If we come back into this box right here now for natural gas, I want to see this provide a level of support. And go higher. I don't want to see it eat through back through that, especially on the close. Gold, I'll give you that in a sec. Copper. Ooh, I like copper. Oh, if we can get down to 79575, any entry in here for long in copper. I do like copper long. You'd like to see a retracement back into at least this level here. Catch that, leave that last little portion open. Stop loss will be sitting right down tight to that bottom right there. We haven't really got a market structure break yet. We just barely have a body above this level here. That's why I checked. So it's not a swing. It's still inside this range. So we could retrace back into here. And if we go through that, we're going to extend this range even lower yet. But right now, it's got a slight bullish feel to it inside this range. So if we can get back into here today and then next week start pushing higher. Well, this is hourly. This hour, the next few hours start pushing higher. We'll find out today whether or not this is a run higher in copper. Oil, I'll give you that in a sec. This is a weekly chart, so I'd like to just see this week and then next week start to climb higher. The gold one's just sitting flat. Soybeans hit their objective yesterday. That's what we're looking for in this here. So if we bang around inside here for a while, I want to see it continue to find support off of this and start running higher. Get through this candle. There's a little small fair value gap in here. If we can get above that, use that for leverage inside this range between these two daily fair value gaps. We use that to climb higher. I'd like to see that. If not, there's a slight imbalance down here. Yeah, I'm kind of flat with soybeans right now. Could go either way. I'd like to see this continue back up into the range. We'll see how it acts inside this wick. I like the fact we keyed off is open again. Let's see if this turns into a bull candle. We get through half that wick. See how that goes. Our sugar, our downside objective. We gave you this a couple of days ago. That's the downside objective. We've hit it nicely now. Right into the consequent encroachment of that box. We've gone from premium to discount again. Bait and switch. Now let's see if this is a bait and switch here. Do we come back and fill this imbalance right here? And this little common gap. There's a void here. So I want to see if this comes back and fills this, the bottom of the box here, and see if how we act outside of that. Sorry, the box should be right there. Coffee, still heading for our objective in coffee. So today, I marked this up last night. So today in cattle, I'd like to see it half this wick. It would be strong if we stay above half this wick on the return and we don't come back into this level. It would be stronger for me if we saw that happen. If not, the 188.275 and then 187.975. And then next week start lifting higher. Coco, we're looking for our downside objective. Look where she hit. So close to our downside objective. So we've been calling Coco for here to here, here to here. So we've been calling it awesome all October. Nailing it. Nailing it. Anyway. So if you're trading commodities in cocoa, you're welcome. Lumber, slumber, pigs hit off that level. Now we're getting a nice reaction off of that. So if we can get down, below 78.22 on a close, things start changing up for me. So I'll keep my eye on little piggies. The gold, I gave you these two levels yesterday. Hit that level, hit this level. Now today I'd like to see that I'd like to see that get down into this level here. I'd like to see it just tap into that level. Leave this little area open here and start running up above these highs. But get above there in the next hour or so, then I'd like to see this being used to support to go higher, and we're starting to look back up into these levels again here. So gold, if you're into gold, that's where I'm looking. We're inside a larger range, so these are the internal range objectives I'd be looking for. Oil, nicely, it's hit up into this order block here, and we've finally traded through that reversal. It's a good sign. So I'd like to see that trade all the way back down into this box and hold high. I'd like to see a measure of retracement in here, which we are seeing on the lower time frame, which I like. We've reversed here off this order block, come back in. We're going lower, so I'm looking for this downside objective. And as soon as we get to the downside objective, Craig, if you were listening, you're probably not here yet, but if you're looking at oil, the old Texas T here, I'd like to see that get back into this box and then start looking for a reversal to go higher and take out these highs here. Once good encroachment of that box would be nice, and then leave from there. The fact that it's coming back off that and just hitting that, if it leaves that open as a breakaway gap and then starts to run for a higher objective, which we will put mess with that every time. As an upside, so that'll be like $2. That'll be like a whole dollar. It's worth a run. We can get it for $1. Swissy still sitting on top. I like the fact that it's in the top portion of that daily fair value gap. We're working the top portion of that. I'd like to see that start to really work its way out of here. We've barely got anything that's closed above that now. So I don't like all this waffling in here. I like to see 1 or 2 candles, 3 the tops, and then I start getting antsy when something's sitting in a consolidation like that, because then you're looking at the whole consolidation where you need to see a displacement to support the upside or the downside displacement, and then use the CAM model for an entry on those. Tesla's right through that level we were looking for yesterday. They ran straight through that, so I'm looking for the mean threshold. We're through the mean threshold, so I'd like to see this one trade one more time now today, clear out the highs and run lower. If it doesn't, just comes up to the rejection block, pay yourself at the rejection blocks, man. I tell you, they will destroy you. Many times you'll see them come right up to there, roll over, and come back down again inside that range. And you've got a large gap here and here. There's a whole void in price where no delivery on the buy side or sell side has happened. So there's a propensity for it to come back into this candle here and see if that holds. And if we don't, then we're back inside this little consolidated range where we may be retracing into this gap. But it's not uncommon for gaps to happen and then they just leave. So we'll see how it acts off these 2 candles when it comes back, if it comes back, or if we get through these 2 on the way up. For Tesla and GTLB. That's what we wanted to see it close above this level. It did yesterday, so it did what we wanted. Now we want to see it come back and use this level as support to go higher. So anywhere inside here would be a nice little run higher. And if you guys have a new stock you want me to look at, we'll do some chart practice on it. I'm not giving financial advice. I'm just looking at the chart. We'll use the methods that we're using every day to analyze the markets. And I'll tell you where I think it's the candles are moving. It's not financial advice. I do not give financial advice. I'm not a financial advisor. Busted up, retired firefighter. That's what I am. All right, let's get back into it here. All right, let's see who's in the house this morning. Who's in the house? What do we got here?
Have you ever been so angry?
All right. Oh, Craig is in the house. Dave Berry, good morning. Happy Friday. Buenos dias. Buenos dias, Edgar. ¿Dónde está la playa, my friend? Where's the beach, man? That's all. I don't know much Espanol, but I do like ¿Dónde está la playa, my friends? Craig, good morning. Hans, Adi, my friend. How you doing? Good morning. Happy from Toronto. Adi, we'll have to meet up sometime, have a chat, man. I love the fact you're hitting some good success now. This is lovely. You're using the tools. You're making some demo dollars. You can take me out for a demo coffee if I come. That'd be awesome. Oh, all I can taste is soap on this coffee cup. Russell, good morning. I see you have monetized now. Yes, I have. Yes, I have. For all the work that I put in, if I think it's 1,000 views, you make a penny. And I had 6 hours and I had 600 views. So that'll tell you I had made less than a penny. So if you think I'm in this for the money, I'm not. It's a lot of work, 6 hours to get paid a penny. Hadi, good morning, Russell. Greg, green from yesterday, crude waiting to buy. Yes, I agree with you, Craig. It is. Russell, just saw a nice reversal in crude. Up. You up at 5 a.m.? No, I'm up at 6 o'clock Canadian time, which is like 8 o'clock New York time. That's what all the trades happen, huh? Oh, Russell was talking to Craig. Sorry. You held overnight, of course. Crude oil bile. Good morning, all. Craig. NVDA. Oh, the old NVIDIA, eh? I can look at that one. I got a few minutes before the open. NVDA. This is that $1 trillion company or something like that, isn't it? The one that makes all the chips. I don't follow all that stuff. I'll tell you where you could make some Doozer cash here. Let's look at this big low back in October of 2022 on a daily chart. So if we break these highs, you look for these highs to hold price, and it breaks the highs here, or it breaks the high right there, comes back inside it right here to go long, aiming for all this gaps and stuff in here, and that you want to see that be the next level to climb above. It climbs above it, runs all the way through it. So as soon as it closes below it and you see that this is a reversal above an old high, look for that candle to provide support. It does. Goes lower, takes out that low. If it takes that low out, then you want to see the next low inside the larger range, and you pull your fib tool on the larger range, see if that holds at 50%. See that? 62% retracement back into that range. Starts heading higher. Reversal right here. Body trades above it, so you wait for the candle to break above this high. It does right here. Comes back, gives it a kiss, takes me on a date, and off we go. So even NVIDIA, you could have seen some really nice entries. But that's okay. You can still stay in this, man. You can still work the charts. Anyway, where we are in NVIDIA right now. Crap, look at this, hey? You guys excited about NVIDIA? Back in November, breaks all this down here. You get excited when you see that kind of stuff and a run back into the range. You go, okay, so if we break this high here, I'd love to see that and tap it and give it a, and get out of here, right? So it gaps up. You go, ooh, you feel the tickle. And then all of a sudden it gapped up again and gave you one opportunity to get in right there. And if you didn't take that right at that moment, she left town without you, retrace back into these cluster of candles here. You can see this reversal, taking out these little lows here. Look for this order block and look for this order block. Body trades above it, comes back inside the gap, goes higher, aiming for this old high here or this fair value gap. If you see a support off of this candle, you start to get excited about being better inside that range. So it comes back all the way back inside it, right in here, gaps back into that little fair value gap. The second level reversal, all the way back into that, gives you a perfect entry right there. And then, boom, 2024. Welcome to 20. You would have bought in there at 45 bucks. You've doubled your money. Well, I guess you wouldn't have. You would have more than doubled your money if you're up to 140 already. Sheesh. Oh, wow. Look at this. Let me just do one of these little puppies for you here. Look for 4. There's 3. 163. 163.18. If that was a 4-banger spring projection, that's my upside objective for Nvidia, Mr. Chips. You'd have to change your mind up in terms of a small range retracement. We've already ran through this cluster here for a CAM Model 1 entry. You ran through it on a close. You're above CAM Model 1 entry. You came back into it at 129, and now you're sitting at 140. So you're already up 10% there, I think. One more. So all the time you're finding support off these candles, they're good. If each time you see an old high taken and you see that fair value gap forming here, you want to look at a swing point. If it takes out this on a downside, we're looking for a run deeper back into this range or into this small range here. And then if we take out that candle, we're looking even lower. So still bullish in Nvidia for the time being. That helps. Good morning, sir. Love your teaching. Thank you. You're welcome. You're welcome. You're welcome. Amarjit. I like that name, Amarjit. I like to give it more of the accent that it was originally Amarjit. Craig, that is funny. JVZ 3.25 T. I don't know what that is. 3.5 T. I don't know what the 3.5 T is. Sorry. So we have a consolidation CAM Model 1. See if that continues to go higher now. And I'm not touching this until we see the news release. Thanks, great analysis. Holy afternoon. Holy, how's it in merry old England? How's my little town over there? How's Portsmouth? 3.5. Oh, $3.5 trillion. Thanks. There, GVK. That's huge. That is, no wonder they said it's more than the Canadian economy put together. Oh, or total gross domestic product in Canada. That's crazy. I have to open up my window every once in a while, just kind of cool this room off because I closed the door and I don't want my computer overheating. So we're in the perfect season for cooling the room down. I open up this window, so I have to keep my little vest on now and cool the room down a bit. Because I'm a cheap guy. I don't like using my air conditioning if I don't need to. And now it's cold, so you don't have air conditioning on. But the room gets kind of hot in here. $3.5 trillion. Man, you gotta love the guy who invented all that lot. Or the woman. I'm not saying it was a guy. It could have been a woman. So that's a CAM model entry for a continuation here. If we get through here, which we have on a close. Yeah, I'd like to see that come back, give a little bit of a kiss here and go higher. We do have an upside. I've been calling for upside today, so I'd like to see, I would have like to see a measure of retracement, which was that really. And I've now denied myself an entry because I was too busy talking. We did have snow. It is slowly melting. I went out this morning and it's in the shadows where the sun doesn't come across properly. So all the stuff that's in shadow still has snow in it, like alongside our fence. The sun doesn't come there this time of year, so that the snow stays for quite some time. It has to be quite hot to melt it all. But we're back up to like 13 degrees, I think, today. That's Celsius, by the way. What are we up to today? Oh, it's -5 right now. Oh, we're going up to a balmy 10 degrees today. To get out my little bathing suit. Hey, shush. How did you start there? No one's talking to you. If you're looking at this on a 15-second chart, like you're saying, oh, why is it reversing here? Look at the 15-second chart. See that right there? Came back up into that range. That would be the magic box. Now I'm looking down here for the next one. Back into that weekly fair value gap again. So I wanted to see a mark at a level of retracement. Well, there you go. You would have just raced internal range liquidity. You could have nailed yourself 50 handles there. It's all about how to handle the handles, my friends. I wanted to see a retracement back into here and go higher, but I think I'm looking for now the midpoint of this consequent encroachment. If this kind of holds here now and the next hour opens up, comes back, gives us this to the consequent encroachment and pushes higher, I'd like to see that. So I have key levels I want to be looking for. Oh, yes. Yes, indeed. 472. Let me write this down. These are my levels. Are you writing this down, you guys? I like 472. I like 484. I'm sorry, 485. I like the bottom of this here. We find support here. 472 is a little downward line. I'd like to see a line of interest. Let me put a line of interest in here. 472, somewhere in here. I have a template saying watch here. My wife loves to get all pumped up in the morning when she's all like, she's one of those people that just love life. You know, one of those grade 2 teachers. She used to be a grade 2 teacher, and it's like living with Mary Poppins. They dance around the house. They're happy all the time. They're just a special people, and it's just such a joy to be around it all the time. And she's playing Taylor Swift this morning. Shake it off. Shake, and she's dancing around with shake it off. Shake. I'm like, oh, okay. And now I've got that song in my head. So if you've had some rough trades this week, just shake it off, baby. Taylor Swift, that mofo. So let's see where we end up. See if you're through the mean threshold of there, then we're going lower. And we've already closed below the mean threshold, so we're heading for here. Larger range. My little Boxio, if I was going to put a little Boxio in here. This is all technical jargon. Boxio, Taylor Swift, that mofo. This is all jargon you guys are going to have to learn. Morning, Abs. How you going, buddy? The sky is dull gray. Hasn't seen the sun today. Oh yeah, let's look at our regular trading hour gap here. Burr, burr, burr. 406. Where are we at? 493. Nice. $493. Wow, that is a pretty big gap. Right there. Wow. Regular trading hour gap. Oh, didn't get it. Shake it off. Oh, what did we hit? See, this is when you go, okay, where was my analysis? Incorrect there. What did I miss? And why did I not get what I wanted there? What did I miss? And this is what I obsess over. Like, why did my analysis break down there? Okay, new week opening gap. Back to the consequent encroachment. That was what's holding price. And we see how we're holding it just above the consequent encroachment. We're not actually hitting it. Higher time frame, stronger than the little 15-second chart. Should have gone down there. What am I? Did we trade back through this? We did. Through it again. Yep. There's Friday's new initial presentation on a 15-second chart. See how it came back, found support, kept going higher. Put that on a 1-minute chart, and we'll see where she sits. It's not that one. But the 15-second one you can see is bang on. So we're looking for it to go higher, but I wanted to see it come back, give me a kiss before he took me to the prom, but nope. Player's gonna play. I'm looking for 575. And then 587, 560. How are we doing in oil, Craig? How are we doing in oil? So if we get through here, I'd like to see a measure. We did get the retracement back into this level. I didn't take that. Where was that low? So over here, back to this order block here. Interesting. So we have a potential reversal back here. If we just play off of this right now and start pushing through and get above this level, looking for higher prices, I'd like to see in that. We did come back and leave that open. I like that. But it's too premium for me even inside that range, so let her fly. She shall participate without me. Through the new day opening gap on the 22nd. See if we can get a, no, we're already through that. 574. Let's see if we get that's 575 right there. Let's hit the rejection block. Now, are we going to keep pushing higher and get through that wick? We're going to start digging into this wick here now. If it reverses on us and just comes back and slams through, you'll know why I'm an adamant believer in pay yourself at rejection blocks. Mustafa, good morning. Waiting for a dip to buy. Good morning. Been a good morning for trading so far, eh? It would have been had I caught a nice caught the run this morning. There's nothing in here. We would have caught this at 9:30. Our initial fair value gap is here. Where's the 1 minute one? We don't have a 1 minute one yet. Oh, we do. Right there. It's a little pin line. So this will be interesting to see how that little pin line there works, because when we look at a 15-second chart, it's down here. So if we break this on the downside, I'd like to see this start to retrace back into this range again and use that big gap as support to go lower. But we have to take this on a low. So 680 is the last week's high. 602 is this week's high. You see how that rejection block at 75 or 74 there, which is what we're calling, has an area of sensitivity to it. So if it rolled over now and I started hammering all the way back, and all those people who were gunning for this high, you missed the arrays that are, there's levels of arrays that are still important. Yeah, if it runs through it, I'm all right with that. But if you paid yourself right there, you talk about a level of precision. If that reverses and comes back in, and you get into the discipline of paying yourself at rejection blocks, and you don't need to convince Derek or Lambo. I think those guys are quite convinced that even in a small range, pay yourself at rejection blocks, man. Especially consolidations. They get hit all the time and you never get the high. Not never. You seldom get the highs taken unless it's a seek and destroy kind of moment, right? Morning, Paulette. I love that saying, welcome family. That's lovely. Welcome, Paulette. Oh, Mustafa, thank you. Thanks for reminding me. We do need our little illustrious friend here. So right now we're still bullish. So we'll stick the carrot up here. We're still looking for this level right in here. Did you see that hit that carrot yesterday? I posted it on the Telegram channel. The little bunny rabbit eating the carrot after that upside objective we were looking for yesterday. It hit it just after I left in the afternoon, after the 6 hours of long running all day yesterday. It hit the carrot we expected, did a little bit of retracement, and then we're going higher. So it's nice to see it. Friday's volume imbalance right there. I love your indicator, Tristan. I really do like that. So look, watch again for the next level, which is 586. See if we see a level of so it would literally be the top of this 1 hour fair value gap. In the 15-second chart, we did not break that low, so we still continue to go higher. We've now taken out this high. You come back into that level to go higher. Again, if we take out that low, then we switch it up, get back in sync with the market, we're going lower. We've taken out all these little highs in here, reverse, takes this low out here with a close. We're coming back into this range, and here's where our next high goes for this larger range or inside. And that volume imbalance. Let's see what happens there. See if we kick off that. We trade back into here, right there. We've got this reversal up. We can go all the way back up into here. And leave a little portion open that will be stronger for a decline. This would be a nice little institutional order flow entry drill to go lower. We're back inside this candle here right now. Paulette, Telegram channel is right above us, Paulette. It's in there's 3 links. You'll see it in just by my face there on the main screen. You'll see 3 links. Click on that. And if you see at the bottom of this little Telegram, everybody's welcome. The only rules, and I'm sure you'll be fine, the only rules there are be kind to everybody. If you're rude, you're gone. I'll just ban you. It's a community of people that are like-minded. We don't talk about retail. Everybody just loves trading ICT techniques. So we're just in it with no drama. I don't have all those extra little, like Michael has in his, he has all these sidebars that he's opened up for people to have discussions, and they get into some insane discussions that are so negative. So I don't support that kind of stuff. We just stick with like-minded things, be happy. Grade 2 teacher stuff, you know. She's rubbing off on me. See how we've traded above this level now? We traded into here. I wanted to see it go lower. So it didn't. We're in a consolidation, small little range. You want to see it break this low here for a break in market structure. This candle here was just broken to the downside, came back in and just kind of slightly extended below that low. We got a rejection block again right there. See that? We did not take out that swing point on a full candle. So you look for back up here, body trades through it. We come back inside it right here and extend the range for senior carrot. So if you're trying to trade short without full confirmation of a break in market structure, all you're running for is whatever's inside this range. And right there, you're buying an extreme discount to try and get an extreme, slightly more extreme discount below you. So you're paying not a premium for a discount, you're paying for a super discount for even less. So you're going to get hammered if that comes back against you. And your stop loss would be here. So if your stop was there and you said, ooh, I'm on the wrong side of that, it traded above. The moment it trades back into this candle, offset some of your loss that you would have taken catching this short. That's the loss you would have taken instead of all of that, if that makes any sense to you guys. So we're looking for that 588 level, 585 level, that mean threshold or consequent encroachment of the wick, which is right there, 587. So let's see how we're banging on it. See how that's an area of sensitivity. It's the mean threshold, or consequent encroachment of this wick. And we're banging around on that there, that 50% mark. And it's also a fair value gap as well, an hourly. And we're still in that first half hour where you don't touch the markets. You sit and you discipline yourself to just sit and wait. There's the carrot. Good. Now we're running through these highs at 602. And those of you who are saying, I knew it was going there, good for you. Good for you. If you've got your method, you don't need what I'm doing. You don't see the Telegram link. Stand by, Paulette, stand by. Right there. See where it says 3 more links? Go right there to LinkedIn and click that one there, Paulette. I have Facebook, Twitter, and all that as well. So you can just click on that link right, oops, sorry, this link right here, and you'll pop in. Okay, that's where you'll find it. It's under 3 more links right here. So now we've taken that high. Now I'm hunting for reversals. If we're looking for a whole new high for, let me see what the daily chart looks like here. We're looking for that fair value gap now is filled at 606 on the hourly. So my next level is 629, 629.5, and then the highs. So here's where you start hunting for a reversal. And then I love our downside objective, which is way down here. That's way up there now. We're like 100 and somewhat handles there, isn't it? It's 200 handles away. So 6, we're looking for right here, 629. What is your Telegram? What indicators do you use? I use my buddy Tristan's one he designed for us, which is the 930 ICT 930 fair value gap. And I put that on my 1 minute chart. And I put it on my 15-minute chart. I have my magic numbers, which is my stuff. That won't do you any good. All the time you don't understand what it means. It's just dots on your page, and you'll just be like, I have no idea what these dots are and why they're there. So just ignore that one for the time being. I will get around to discussing that one time, but I just haven't got into I discussed it earlier in one of my early videos quite a lot, but I didn't expand on it and show you it on a fractal nature. And then in the 15-minute chart, I will use the new week opening gap, regular trading hours gap indicator, just so I can see. And I'm like abs. I like to put a lot of them on there so I can look back on. I know Michael likes to use just the week, but I set mine up for like 60 or something like that. I just crank them all in there just to see if there's a level of sensitivity off of them from previous weeks. And on the 1 hour, I use ICT setups for life, so it gives me the which one is it? I think it gives me the highs, the lows of the London Open. No, well, how come it's not in there? Is it on this one? No. There's the one I like to see. Obviously, I don't rely on it a hell of a lot. And that's putting the... I'm pretty sure that was this one. Stand by. Yeah, it's supposed to give me all of these. This one, Set Up for Life by MK. It gives you all the Asian sessions, highs, lows, and all that. It may only work on a 15-minute chart. Stand by. Yeah, it's a 15 minutes. So you see all the it puts the boxes around the sessions. So this one here should be on this one here, but then it starts to get too messy for me. So I have to put it on other charts because then it just gets too cluttered. As you can see, even my 1 hour charts, like, so we have an event horizon above us right here, that yellow. And that is sitting at 650. So that'll be the next objective up there, 650. The carrot. Okay, cool. Only levels 697 previous low. It's closing daily fair value gap. 60 or 680. Yeah. You'd be concerned about a reversal at 10? Yeah, it's really going to need to show its hand. Yeah, still has a ways to go to get Wednesday's high. that first February really delivered today. It did on a 15-second chart. What do we got on a 1-minute chart? Yeah, look at that. Came down, bing, bing, right on it, and left dodge. Really nice. So Tristan, excellent, man. Even though it's just a small tick or two, it still marks it, and you can still see it's a level of sensitivity there. I love it. Oh yeah. Interesting. Did you note that, Abs? Did you note that? Here's the event horizon. I want to see us get through that and start digging up into the new day opening gap above us. And then the drawn liquidity is the next one above this. So once we get through this, I'd like to see us aim for that 2,800. Yeah, I know it's 200 handles away on a Friday, but it is not not unusual for it to run like the Dickens on a Friday. If you're the government and you want to make new highs, you want to impress people, you want to start pushing that thing right up through here. Economy's growing. It's great with this government, but I can see it. Makes sense. Tristan, you guys, that's the guy you want to see right there. Tristan Lee. That's my man. That's my man. And if you want him to build you an indicator, pay him thousands and thousands of dollars, and he'll do it for you. I'm kidding. I don't know what Tristan would charge, or even if he would build it. But he loves the stuff, and it's great to meet him. It's great to see somebody who's got an amazing talent for coding. It's awesome. I tried building bots back in the day, got really obsessed with it. Spent hundreds of hours building bots using that FX Dreamer on the MT4, MT5 platforms. It's so much fun doing that, but man, did I spend a lot of time building them. So there's the 650. We'll see how we get on that on the carrot. That's a huge range there for the first opening range. 9:30 till 10. Like, come on. Plus the opening range gap. What is this weavy stuff going on here? Oh, there you go. It looked like it was. Yeah, look at that. See, it looks like it's doing the weave. Mwah! Kisses the carrot. All right, so next upside objective is right here. At 80. I'm not in any of this morning, and that's okay. That's the one you go, oh my, you missed a nice little run there this morning, especially off of this, but This is one of those ones where 70% of the time we see it come back to 50%. If you started off doing what Michael was saying, put a 35 handle stop loss on that, you just got taken straight out right there. So you would have had a 35 handle loss directly. There would have been no purge into that regular trading hour gap at all. So it's not 100%, but he never said it was 100%. He said it was 70% of the time. And this is that percentage of the time where it did not return in there. It would have just ran straight through you. So how do you get back in sync with that? Look for the first initial presentation, hits it, bounces on it, and then finally leaves to the upside. On a 15-second chart, where would you have seen that? Look at the 15-second chart one. Oh, here's our carrot from yesterday. That's the one we wanted to see break to the upside yesterday. It did. Then finally broke it, came back, gave the carrot a kiss right here. Went long. How ironic is that? Okay, anyway. Initial presentation today on a 15-second chart. All right, that's Thursdays. Where's Fridays? Friday. Is it in here? It's one of these in here. Anyway, let's go up here. One more minute. We're sitting in that event horizon right here, right now. Here's 10 o'clock. I love the way it just stopped right there, eat off of it, and just kept going higher, like right there on that. Looking for this July 12th new day opening gap. What time is London open? I use 2 to 5 a.m. for London highs and lows. That's right. Send to Shuren. Send Shuren. Yeah, that's the same. That's the right times. 2 to 5 a.m. Ring the bell, eat the carrot. Very hungry this thing this morning, hey? That's the top of the new day opening gap above you. And if we get through that, there's your upside objective for the new week opening gap at July 15th. 2 days before my birthday. What is that 9:30 fair value gap indicator called? Tristan's 9:30 2-day 9-day or 9:30 opening gap. So this is the one you want. ICT 9:30 fair value gap by Tristan. You'll see it right here. The 9-day Tristan Lee That is the man right there. Tristan Lee, 85. And he's not 85 years old. He's probably born in 85. Young fella, smart as a whip. Let me tell you, that's the man right there. Is the one you want right there. Tristan Lee, the man to see. When you're overseas, sitting in a tree, and thinking, how does he manage to do what he does? I could be a rapper. Slim Shady, step to the side. Darren, do you think we'll see take out July's high today? Mustafa, if we get above, I think the drawn liquidity is definitely these July's. Like you got a new week opening gap here, a new week opening gap. So you're talking about magnets on price. You know how Michael likes to talk about magnets? That is the big draw. Right now, I'm full steam for these things. Until I see a reversal on the lower time frames, I am full steam for that. I'm full steam for the old highs. That'd be a great representation of or a great push for the government to get the economy looking like it's just incredible under the present government, right? So if you want to create that, look at these on a weekly chart. Now don't forget we've got that's 21.24. Ooh, I don't know. That's a long run today. I don't think it's gonna make it today. Who knows? Stranger things have happened, right? Right now we're gunning for here. We've taken out those highs there. And I'm looking for, let's put this on a bigger chart here. Right here. This is my first little area of interest for me. I like that right there. That could be an upside objective to reach for today. And if we get a reaction off of that, I'm looking for a run. Even if it's the afternoon, I'm looking for a run, a nice big wick forming in here. See all these wicks? That's like dollar bills, my friend. It's dollar bills. And on the daily chart, I'll be looking for more dollar bills down here. Big old box right there to there. It's a big range, man. That's 800 all the way back down to 500. That's the 300 handles up and then another 300 handles down. Like today, it's already gone 364. We're already up 300 handles. There's another 300 handles there. And then come back down to here. There's 1,000 handles in one day. So will we reach for this all-time high up here? At 21.23, I don't know. We'd have to get through this and use that for support, and it would have to rocket through that, come back, give it a tap. Oh no, it wouldn't even be giving it a tap, because that's well, I guess if you find it giving it a tap there somewhere in the hourly chart, and then still like accelerating like crazy, you'd have to get through this candle's low, this mean threshold. Like this may not happen this week. It may be the start of next week. What have we got? Yeah, one more run up for before the election. I don't think we're going to get there today, but we could see that for next week. If we get a retracement back into here and then another acceleration higher, I do like that idea because we have taken that low. That lines up with everything that we've been talking about. So that would be my downside objective. And I'll be looking for a reversal there to start pushing higher on the daily. That would be a really nice kind of idea I'd like to see there. Anyway, and back to my So that's the box right there. We have a reversal right now happening. So we'll see. It's just a reverse, but it's not a swing reversal. We have not broken market structure to the downside. We're still inside this right now. We've came back up. We're giving it a tap. So I'm looking for lower prices right now inside this small little range, and you're already at a discount. So it's not a buy. You'd have to get that like right up here. And if it fails, comes back, gives you an opportunity to get out because it's going higher. That's what we're just going to watch right now in terms of what would be the best opportunity to short that. That is not giving you any advice to short it by any chance. I'm just using it as a observation tool right now. I'm looking for here to here on a 1 minute chart. Fair value gap is now an inversion. So I look at that as an inversion because we've now traded through it, back to it. Now I want to see this. Usually what Michael says, in order for it to be an inversion by his definition, you want to see it go down, come back up into it after taking out a previous low. So if it drops down, takes out a little low, comes back up, finds support at it, and then goes down lower, that would be the definition of an inversion fair value gap. And again, I may not define it exactly as he does, but right there is where I'm looking for a short. It has not hit that consequent encroachment just short of it, so that's more of a positive sign for me. And I'd like to see that start dropping lower now. The ideal one would be right here. Best if it stays below that and doesn't even get back in there. I like that for a short. See if we take this low out, and then I'm looking for this whole big block here. Not that we're going to trade all the way back into it, but then I'd be more of, okay, we're coming back to balance some price before we start running back higher, because right now it's out of control. Look how much it's running up there. So you want to see a measure of retracement at some point. And 10 o'clock, here's your 10:01 silver bullet, enter short. That's what I see right now. Not saying take it, because I'm not 100% confident that we're going to come all the way back down just yet. So all I am is inside this range. If you're looking at, for example, watch this. So you'd have to take your fib tool, pull it up to there. If you use my fib tool retracement technique, you want to be above here. So you don't want to be buying at that low. Or see how 50% is right here. So you want to see it in here or right there. So we're going to pretend. So this is a pretend trade right there. See how we're there? You take that for a short, and then if it trades above it and comes back to it, like the fact that it's digging in there, if your stop loss was here, we're going to pretend, and this is how the fail-safe works. Watch, see where that closes. If your fail-safe's here and it just drives straight through, or your stop loss is there, that's what you're willing to risk, then you're out. Even though we know right now we're on the wrong side of this, it's starting to push through. It's not just tap this little area and reject it off of it. The fact that we're moving through into this candle, see there, right there. Now, if it comes back here, you get yourself an opportunity to get out of your trade. If it takes that high, you're out again anyway before your stop loss gets taken. So watch right there, bang. Now I'm out. I'm break even, I'm neutral, and now I know it's going higher. So that's how your fail-safe works. See that? Now watch to see if that high gets taken. It can come back into that consequent encroachment. Tap this and then start going higher. So that's how you pick the ideal place. If you would have caught that and that would have been a bomber going back down, it would have been great. We weren't convinced just yet until we see that. We just have a swing inside a small range. So if you would have got that or bought that just above the 50%, it hit 62, you move to break even, take a chunk of your change off at 50% to pay yourself here, move to 50%. Even in that small little run here that's going against you, you still caught a little piece of the action. It's how you catch yourself. And if you're on the wrong side of it, see how it's traded above it, you come back in, you break even. Now you sit on the sidelines and wait for this to get taken. See how it's traded back through it again? When it's banging around like this, you can get beat up in it. So you don't say, oh my God, see, I should have stayed in that. No, you shouldn't. You don't know that that's coming all the way back down here until we break this. Then you can say, all right, now I've got a break in structure and I have that reversal happening. It just traded back up into that candle here. I'm all right with that. I'm all right with that. So you just wait here. And you patiently wait. And that's just getting back in sync with where the price is going. That we thought was going to go up. It came back down, went through it. You go, oh, now I'm on the wrong side of it again. Get back in sync. I'm not going to reinvest in that. I'll wait for a better setup. I don't want to be beat up inside a consolidation. So I'm looking at this candle right here now. See if I let me get rid of that now. Looking for a reaction right here. Right there, good inside that guy. We'll see if we come back and rebalance this and get through that again. We have not taken this on a body close. So just because a wick went down there, if you went short from there, you're just getting your ass handed to you. That turns around and goes all the way higher. It did not break market structure. And some people may say, yes, it did with a wick. I like bodies. Bodies give me better confirmation. Wicks don't. Just me. So we're back up into this candle. Ideally, I'd like to see this wick hold at 50%, and the bodies do. See how the bodies respect the lowest wick? It's 50% level, just below it, and now we're looking to go lower. And if you're jumping in on this and you're trying to nail a run down, and you want to jump in early, you're gambling, you're reaching for that one-arm bandit, you're looking for the rush, you're looking for the adrenaline, and you're trading completely off your emotions, which is debilitating to your bank account, and it's hard on your body. The cortisol, you keep squirting into your body every time you stress out over this. If you don't see your setup, don't take it, man. Just wait. If this rockets down here right now, who cares? There's other days, and it's Friday. You want to get slapped around? You look at all this, you think it's gonna come back. Don't overshoot PD arrays. You don't know it's coming all the way back there yet. We haven't even seen it break market structure yet. Yeah, we got a small reversal. Went above it. That broke my rule. So now my next rule is that's got to get taken. Or at least trade back into here and find support off of that and come lower. Because see how we've taken this low here? There becomes the new reversal. And this candle now becomes support to go higher. So that candle would be, if I was going to go higher, I'd have to break that candle's high, and this fair value gap now becomes the endorsement for higher prices. And if I've got one that says I'm going short and one that says I'm going higher, then that candle and that candle become my two key levels. Do you understand that? See how this level here, I need to break structure on the downside to prove that I'm going short. And if this is just a continuation, a low resistance liquidity run, and we've just taken out a low here, we've got a reversal, and we've got the candle that supports the reversal. This candle supports the run up. So if we take out the support to the upside, then we leverage on it to go higher. So a slightly different colored one here. I gave you this in Bitcoin one day and said to you guys, what would you like to see? I'm going to make this a little slightly different color so you guys get an idea what it looks like. Give it that color. So that one goes higher, that one goes lower. See how they're overlapping one another? So which one are you gambling on? Because there's no certainty there until one side gets taken, one or the other side gets taken, which is that one or that one. Discount, premium. How do you determine if the liquidity tag or giving indication or direction change with a small run up, making short-term highs? How do you determine if the liquidity tag or giving indication for direction change with a small run up, making? How do I determine that? I just gave that to you right now. So now if we start taking this on out here, then I'm looking for lower. So see how we came back up inside that fair value gap, but we did not tag that one there. We want to drop down, come back up. So for me, I'm waiting for my rule is here, even though we have these constant wicks. So 18 candle, we should see a swing at 18, 19, or 21. We should start seeing a swing here. And if it's just a wick, then 19 can reverse on 18. And 21 can set a high or a low. Ideally, I'd like to see 21 candle, the 21-minute candle sitting right in here. And then wick down and take this out. The wick up, I should say, and then start a body running down for the lows so we can start to see a little bit of a reversal here. Not a huge break in market structure, but it would be a break. The ideal break would be below these guys here. Then you really know you're on a hunt. And don't forget this. Here's another scenario you got to be aware of. So you got to be super nimble in your ranges to play inside. This is your first one. Your second one, inside your fib tool, you want to buy a discount or premium to sell at a discount. What objectives are there to reach for? And how to scale out of that. Because if you're on the wrong side of this and this becomes the swing point or an even bigger run up, like this whole leg we just had here, if this becomes the next big leg up, then we're looking for, we'll have to take the, see what I'm saying? That's one leg. And if this becomes the small retracement back into this small range here, and we break structure to the upside, and we start to see these candles give way and start to run higher, then we know you pull your fib tool from here to here, create an extension, look for 2.5 to 4 handle, 4 standard deviations and see where that lines up above you. That's what I'm going to do anyway. It may not be the thing. So here's 19, here's 20. So 18 or 17, 18 goes against 17. These ones, I call them the squabblers as well. There's a morning squabblers, and then there's the 16, 17, 18 squabblers. They go back and forth, and one of them determines the high or the low. This dot here should be sitting down here. That's why I wanted. And Tristan, I know you made, I just couldn't find an update that gave me my dots on the right, on the swing point. So the dot should be down here. And I know you created one that gave me that. I just can't find it. But anyway, makes my point. There's the 21. We're on that 21 dot right now. Now see how we're starting to work our way through this level. So this could be the next projection higher, swing projection. We got to take out these highs, find some leverage in here. Where did my, what happened to my, how come my shtick's not working? Uh-oh. My ball's stuck. Oh, here we go. My ball's stuck. Stand by, lads. My rolly ball was stuck. Me balls was stuck. All right. See how we've broke it. So you start looking for these breaks and structure to the upside. We've took it here. You didn't even come back and tag it. You look at this one here. We want to see a body get above here. So carrot now goes up higher. And here's your new extension. So this, let's pull a fib tool on this, looking for Notice how we did not get a body trade below here. Sexy, I tell you. You can get caught on that if you're trying to short it. You did not get the rules met, so I didn't take the, you don't take the trade, right? Here's a good example of why you wait for your setup. Swing projection. Here's two. If we're looking for a two banger, and we're looking for a three banger, and we're looking for a four banger. There's your swing projection. Okay, those are my upside objectives, just using a swing projection. We come back, we want to see it tag the top of this. If it digs deeper into this range here, looking for this candle's high or a fill of that one and leave the second one open. You've got 1, 2. Michael says it tends to run into the second one. So look for a run here. And if we start getting back digs and really deep into here, and we overshoot this one and this one, then my fear is that, oh, we created another reversal. I want to see this structure get taken on the downside. Then that becomes a potential reversal. So see how it's just come back into these old highs here inside that order block. We got 3 of them here. So that's quite a sizable run. Just shy of it, touching that. That high right there is 8375. Low is what? High is 8375. Low is 8475. So one handle short of tagging that out. But we're looking at this. That's good, because at least that we're inside this guy here. We can go from the high all the way to the bottom, back where that line is right there. So let's see what, this is really nice to see that the fair value gap doesn't completely fill as well. I'd love to see that just continue to rocket back up now. Any significance to a 21-minute candle time? Yes, there is a significance to a 21-minute candle time. And there's a significance to 17, 18, 12. All these are significant times. Knowing when to use them, that guy there dropping below. There's the 18. And how they contradict each other. In here, there's a usual contradiction between 16, 17, and 18. I'll share this with you guys. Watch this while we're waiting for this thing to see if it continues off this candle here. I'll share this with you. How many people got in it? 38. You're about to learn something. Where's the 0? 1, 2, 3, 4, 5, 6, 7, 8, 9. 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. 1, 2, 3, 4, 5, 6, 7, 8, 9. Swing 10, 11, 12. Squabblers 13, 14, 15, 16, 17 squabblers, 18, 19, 20. That's hourly. Every hour, those 1 minutes that you saw, same as every hour. Now, take that to a daily chart. Beginning of the month. Where's August 1st? There's 31st right there. 1, 2, 3. So 2, 2, 3, and 4 or 2, 4, 3, 5 is turns. So that's the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, reversal, 22, 23, 24, 1, 2, 2, 3, 4, 5, 6, 7, 8, 9, 10, reversal, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. That's daily. Are you guys starting to see it now? I've shared my secrets with you. Now you take that back to weekly, monthly, it's fractal. There's always swing points. So now if you look at that on a monthly basis, in a 12-month calendar, the numbers I gave you were 2 and 4, 1 and 3. When do we suspect seasonal tendencies to turn? May. That is what? That's 5. So 2, 3, or 1, 3, 2, 4, 5 sometimes turns. Those are my key levels. And you'll look at 7, 2 especially. 2 is the most sensitive day, week, month of the year, of any candle cycle. And you use those in alignment with looking for your specific PD rays at specific times. And you can find yourself, like if you're looking for this to key off this level and it's coming down and you go, you're at 26, well, 27 candle would be an ideal place for us to hit into here. Bang, there's 27 right there. Hits into 27. Now that you say, okay, that's it. This is a good time to see this turn here. When you're using my dots. There you go. I'll give it to you in a nutshell. And now how you use those in accordance with the other techniques that we're teaching you here will make a difference in terms of how accurate you can be in a chart. There, 4-hour volume imbalance. So cool kids on X and YouTube calling Marjet reversals at specific minute mark, like 8 and 11. Any opinions? 8 no, 11 yes. Sometimes 8, but it's not the most common time. Not the most common time. I shared this with 2 guys that I built a bot around. I sent a bot back through time. And the way you do that is you build the bot to go back and search every single high and low that occurs on every minute, every hour, every day, as far back as the data will let you go. It comes back and it gave me a whole shit ton of data in here, and I compiled it, put it into a spreadsheet. I had that AI tool discover what my marks were, and it was pretty easy to see. and it gave me key times that I look for that are the most common. Then you start to say, what minute is the most popular minute? And you know how I first started doing that? I took a sheet of paper. I still have it around somewhere. A sheet of paper, and I would take a grid and I would tick. I would hand tick. I'd go back in time, the beginning of the year, and I'd go through every minute of every damn chart that was out there. And I put a little tick next to one. And then I put a tick. I see a swing point here, like right there. I go, that's a swing point. I put a tick there at that time. Then I'd look for a swing right here, or right here. And I put a tick next to 6. And then I'd look for another swing, and I'd put a tick next to this one here at 10. Then I put another tick here, and I do that for a whole minute. You may not believe it, but I spent hundreds of hours researching this. Hundreds of hours. And then I looked at it, I went, that coincides in what I call candle counting. Back then I called it candle counting. And I was doing it on an hourly chart. And then I was doing it, I went down. I wonder if you can use this on a minute chart, and did it on a minute chart. And then I was like, I bet you could do that on seconds. It works on seconds. It works on minutes, hours, days. And I thought, okay, I've got something here. Because it's definitely, now using all the other tools that Michael have taught me, this is just a way of helping me zero in on when that's going to happen. It doesn't make your trading exponentially better, but it does give you an indication of, when I say today is a 19 day, I'll share that with you guys. Anybody who's new, who's coming in here, won't have a clue what I'm saying until they learn it. But when I say to you, oh, this is an 18, 19 day, like this week has been up and down. So we have a 16, 17, 18, and 19, well, 15 to 19 this week. So there's going to be up and down. We're looking for this. This is the squabbler week. We're looking for which day is going to make the new high. So that's what I call a squabbler week. So that's all related to weeks of the month. And I'm down in a 1 minute chart looking for the opportunity to use this on an hourly, a daily. And when the hour and the day and the week line up with like a 16, 17 reversal, or a 7, 8, or 7, 9, 9, 10 reversal, that's classic for London. You want to go and look in your charts, go look at London's high or low, and watch 9 and 10 candle make a high or a low. The 9th and 10th hour of the day, watch those two. And then 12's the lunch hour in London. So that's when you'll start to see significant, from the day, when the day starts, that is, you'll see that that's the classic turn points. Did you get your setup, Russell? That's all I care about. Did you get a nice setup there? Did it hit the level you were looking for? Well, I can get rid of that. I want to see. See, we've got these candles here taken to the upside. This one here is taken to the upside. So of these two that we're going short or going long, which one has the most strength at the moment? Which one do you guys see? The short or the long? Do you see it providing the greatest strength? Hit the like. This is gold. It is gold. I got 7 likes right now. 34 people. 7 likes. I just gave you something that was beautiful, man. 26. 26 likes. Whatever, maybe people didn't think it was that great. I'm not crying, by the way. I just have itchy eyes. Like, nobody likes my indicator. Tristan, you're going to get popular, man. If people start using my indicator, which is what Tristan built for me, we might have to do some modifications to that, or I might have to get a more updated version that marks the highs and the lows. Is day trading your full-time job? It is now. I don't have a full-time job. I'm a retired, busted up old firefighter. So this is it. This is what I do. I don't really have to worry too much about my my future. Inside this range, look for the box. Where's your little magic box, guys? Put your box out there. And see if it breaks through area of interest. We've keyed off that level there. That's a deep retracement into this range. Back into here, fib tool. You've got to be training yourself to look for these ranges. If you don't, and you say this shit doesn't work, I'm telling you, you're not looking at it right. Optimum trade entry reversal right here, inside that range. You want that to happen, so now what do you look for? Now that we've traded here, if it takes out this low, then we're looking for a lower, and that's the low we're looking for a continuation on the downside, at least inside this range. If we're inside this small range right now, there's one, there's the other, trade from one to the other and go higher. The fact that it didn't, it just went to 62% retracement, and the bodies are still respecting this candle's high. I like that. The wick just came down to the body. We did not reach into this. That's even better for me. That just gives me more bullishness. Now I want to see it trade back through here and start climbing up above these old highs here, using this as support. And that's all it is. You just keep reading those price. I wish I could make it more complicated for you guys. That's all I'm looking at right now. And I know this can get super complicated. I'm just looking for something, a simple way to watch how price acts off of each one of these little areas of interest, right? You want to see how it acts inside here. And you want to see it get on top of that and use this for support to go higher. So you see how we've traded on a downside candle. We went below it. You go, ooh, we broke that high. We're going short. We're going back into this range here. If I can get an opportunity to get the ideal entry is right here. If I can get that entry right there and it stays there, put my stop loss here, and I'm trading back into this range, I'm going to trade to 50 to 62%. Hits 50. Take your trade to move to stop loss to break even, 50%, take half of your trade off, take 10% off at 62. If it reaches 70, which it didn't, then it comes back, takes you out at 50. You just caught that little internal range liquidity in a small run, buying it at a premium, selling it at a discount. It's staying inside the runs. This is like ultra sniping in small, tiny little ranges. Now, you may say, that's not worth it for me, but if that was 696 to the 62% retracement, 696, that's 30 handles just in there. Do you guys want 30 handles? Would you be settling okay on a 30 handle run? Look at that on a 15-second chart. We have a high taken. There's a little imbalance right here. We trade back up inside it. We went above that level there. So you move to the sidelines and wait for this to happen, or wait for a new setup to happen. Takes out a low. You see this, that's too far up inside this range for me to enter into it. Even at this level, it's like not even 50%. So it's not a discount enough for me. So I wouldn't play in it. Okay, we got a new high taken. There's no reversal. There's a reversal right here. Takes out these little highs, but doesn't take that high out. Look for that little box right there. We can trade back inside that box. I go short, and I'm aiming for this liquidity run down below me. You hit it. You're inside the larger range now. What objective would you be looking for? Back here. You hit it. So there's your first payment, second payment, or pull your fib tool, and there's the reversal. So here's where I looked at this and went, no, that's too premium for me to even play in it. Wait for a new setup. Well, here's one right here. Take that short, look for this, and then these down here. Same kind of setup here. You take that high out there. You come back inside. We haven't traded below this yet. We've traded below it now. Look for an entry back into here. Comes back in, gives it a kiss. Look for the range you want to extend. And here's my downside objective. Hit it. Now, see how we're driving through it? Bodies through it. Tap it. I'm looking for this range to extend now. In this case, you'd be looking right there. See if we can get a body through this side of it. And this is what we're looking for on a 15-second chart. The higher time frame already broke through it. So here's the lower time frame. We want to see a range extension. And if we trade through it on a close, and then we're getting back into the range again. There you go. See how we went in here? We're thinking it was going to extend. This isn't the first time this has happened to us today. So we went back through it. You go, okay, I'm on the wrong side of this. Now we're getting back into this range again. Get back in sync with the market. High, low, reverse. See how the body's got, we've taken out that low there. And now we've got this little fair value gap above you here. Body trades above it, comes back inside it. Looking at this range now, is that from premium? So quickly draw your fib tool from here to here and say, did I get in on a discount below 50%? And when it hits 50, move to stop loss to break even. 62, move to 50, take a portion off there. Just took you out. So if this reverses now and slams back down, you'll go, oh man, I even caught a small little piece in here. Does that make sense, you guys? Again, you'd have to be a super sniper and be really efficient at this to see how it's trading back through it right now. It's closing back below there. It tells you it's going lower, right? Super sniper. You'd have to catch that, because if you were aiming for up here, you just got your stop loss taken and you missed an opportunity to pay yourself using my fib tool technique. Look at that. Trade back into that little box back here. Or this one here. You take that one out. If you're looking at this range now, you want to look for a trade back into here, or that guy right there. This little box right here. It's the lower one, the one we were initially aiming for inside that range. For range extension, we've traded through it again, come back right into it. Look at that high, smack it, and now we're extending the range. So even when you're on the wrong side of this, you can still nibble a piece out if you're nimble enough to catch that. Does that make sense to you guys? It was great insight. Thanks, Russell. And get back into our 1 minute candle again. Came back, found support right at that. It's great insight. Thanks, Russell. Cool. My dad was a firefighter. Oh, was he? How old's your dad? How young are you? So now we've got a body below here. As soon as that closes, we'll see if we're still below here or this is just another stop run. And then we're looking for another dive. We've got that high taken back up inside it right here on a 1 minute chart. See, there's the reversal here. Look at that right there. Bodies are still respecting it, and we're in a nice little run. You pay yourself here 50% on that run down. Comes back up inside that level on a 15-second chart. Lovely. Or if it's a 1 minute chart, look right here. That's the bottom of that one there. There's the wick right there. Look at it. Trade through, kissed it, took it on a prom. Took it on a date, my friends. Now we're looking for a deeper run. We're through this now. Come back, find support at it. And you want to see that keep going lower now. Keying off this candle here, which is the breaker that takes all this lot out. See that? That's the breaker that runs all that out. So I want to see this breaker hold price. And if it doesn't, then watch for this level here. We'd start trading through this. We've got a reversal here already, that order block. We'll see where this candle freezes up here now. I want to see a market structure break though. This candle would provide support to go higher inside this range if we close above here, which we did, and we closed above this candle. So now we're back in that range again. Wanted it to go lower. It just took a nice wick, ran down into some order blocks down in here, cleaned up all this. Watch here now. If we get through this candle and that fair value gap on a close, then we're running back down into the range, 50% of the wick to go lower. And that's on a 1 minute chart, so you can see how you can get beat up in here when you want to try and stay in price. So let's focus on this and stay in price action. We're already through that candle into here. There's the full fill. You don't want to see it get any lower than that on a close. Sorry. It should tap that and go. Nope. Look at the bodies. It's just like right on it. It's got to climb through here now. So if you're in this one for the 1 minute reversal, if you didn't have a 15-second chart and you caught your 1 minute reversal and you paid yourself here or on the way down, you paid yourself there and you're looking for a reversal to go back up the other way, you're like right on the fact that it's failing to keep pushing higher here with some certainty. And it's keyed off of this level here. We want to see go lower. You've got one that wants to go higher and this to support to go lower. And right now you've got support lower, back to here to go higher. So you're banging around between these two spots here. One to support your desire to go higher and one to support your desire to go lower. Which one are you going to pick? Those who got in short there obviously want this to provide support. And if they were long on that reversal right there is your indication to move to the sidelines and wait in that position. Because if you're managing it just with the reversals, that reversal below that low, now you move to the sidelines. If you're not using the fib tool, the other way to manage it is use reversal to reversal. Anytime you see a reversal, you just move to the sidelines and wait. And wait for a cleaner setup. And if that's banging around inside here and your stop loss is sitting down here, and the fact that it's banging around here like that, I'd be like right up under 25% of that. I would not want to see this keep coming back into here. It would have to just start really pushing higher now to get out of there. I didn't even want to see it come back through this order block. So the fact that we're in this blob inside a what retail might look at as a bear flag, and right now you've got more bear support than you do have bull support. Until we get above this, then I feel I switch to 51% more happier about a bull than a bear. And on a 15-second chart, look where it's happening here. See that? So we came back into it. Bodies are respecting it right now. That's it. You don't want it to go any lower than that. Here's the candle you want to see it get above now. It already ran through that, came back. That's why you don't want to see it get there. But if it does, now you want to see this one and that candle get taken to the upside and find some support off that. Because you've got this reversal here to go short. You've got this reversal here to go long. They're literally overlapping themselves like we did over here. And you're back to gamblers. Ching ching, pulling on the one-arm bandit. Which direction do you want it to go? And overall, we're bearish. Even though we've taken this out here, we've gone back to bullish now. And this one here is still bearish. If we take that candle out for a bearishness, then we're going lower. If we take this candle, we're going to do market structure break now. If we break this structure here and use this candle for higher, then great. I want to see this get used one more time. It is, and it's digging back in here again. Not a strong reversal. Not a strong one at all. All the time, that supporting price though, you're slightly bullish inside this small range here, from that high to that low. Are you paying yourself from that swing to that low? There's 50%. So you see how you have to be in a nice discount to support this. So you catch that discount array, get to 50, move to break even, take half off. Inside that range, 62%. It moves to 62, comes back and takes you out at 50. Small little range. You got mucked around in. Move to the sidelines, wait. But you got to be disciplined enough to catch the range. You may go, I'm lazy, I want to go for a higher one. And you don't get it. And then you go back later and go, oh yeah, I guess the swing was right there. That takes discipline. See how this is fading now? We ran back up to that original level that we were looking for on the higher time frame. We're dancing around inside it, hit it. Now where the side is failing on the downside. And now you want to see that continue to roll over and eat up these now and dig into this wick. And now that you've taken out that low, you look for the next reversal in here, next fair value gap forming in here. And if it doesn't, look for that high. You've taken that one there, so look for that swing high to get taken, and now you're back into this smaller range again. This is like trying to stay on the horse, not trying to trade this, but this is trying to stay on the horse. Okay, watch this candle here. Got to close. There. Closed above, come back, find support at it. You want to see that start pushing higher now. Back up to that other one, that other imbalance. So you see how we're in this little consolidation now? You want to see it break through here. Get up on top of this level now. And watch the bodies where they end up. Wicks do the damage, remember? Rejection block. No, not just didn't quite hit the rejection block there. Still want to work it, see how we're banging in it. Let's get a body above it and see what we get. There we go. Now, we're not saying trade this stuff. We're just studying price action right now. We want to see if this holds price, or did we just run out liquidity back into this fair value gap above us here? And all the ones we've marked over here, you got to pull them over and say, is there an area of sensitivity there? What range am I in now? From there to there, where am I sitting? Did I get yourself a discount? Am I inside that? Am I using my fib tool to pay myself? And you got to, again, you got to be disciplined to say, no, this is the range I was trading in. Now I want to say, am I past a level like 72% retracement and I'm getting support off of here? I pull it at the next highest range and I start to run that higher. Once I get support off that, I look for this range from here to here. And then I look for this range from here to here. So if you're, you got in off of this one we called right here, you're looking at 50% is right here. So you move your stop loss to break even. Take half your trade off, move to here, take another percent of your trade off, move to 50%, comes back, takes you out inside that larger range there. If it comes back in here one more time and hits this objective here, and you start it again, then you'd look for, it has to be below that 50% though. You'd have to dig in here. If it doesn't, it just hits this level and continues going higher. You're buying a premium for hopefully for a higher premium. And that's not a clean setup, right? No, I start from the 0 hour, like Asia, like as soon as the market closes, that's my 0 hour, the new deck, the next day, the new day. That's where I start counting from. 24 hours in a day. The first day starts at, and Michael says it starts at midnight. I started at 00 Greenwich Mean Time. I start counting from there. You'll find that it still lines up with Michael's times. Hey Darren, just curious, how many trades would you normally go for in a day? Oh man, I could do 4 to 40. Depends on what little ranges I'm looking at, how adventurous I'm being, how confident I am in those levels. Yeah, it can definitely vary quite a lot. But in markets like this, even though, yeah, you can call it, I don't participate in this right now. So the optimum time for me is like As soon as you get on the charts at 6 o'clock or 8 o'clock in the morning, from then until 10:30, 11:30, and when I start getting back into the lunch hour, I hit too many times and I start getting in these situations and I get beat up. Like there's one time we called for this to go lower and it didn't turn back against me. That's one, those ones where I would have taken a loss on it. Like the stop loss would have been above here. It would have come back and taken me out. I would have been taking a loss. And then I would have wanted to get back in again. And when I start getting that anxiousness coming in and I start second guessing myself, I got to move to the sidelines because I've got a lot of psychological stuff going on here from all those years of doing the things that Michael said not to do, like trading with money that I didn't have. I got beat up and I was totally hooked on trading like thousands of times. And it wasn't good because I was just taking loss after loss. So that's deeply ingrained into my neurology now. So I try to just wait for that setup, trying to get that theta wave mindset, you know, that remain calm, find your setup, and then take your trade. Wait for a clean setup in the right time. Find the right time, the right setup. It's so much easier to on your nervous system to trade. So if it means waiting another day, then wait another day. But yeah, 40 trades in a day. It's trading these internal ranges like I'm showing you here. They get quite ambitious. I want to try and get to the point and not say that you guys should get there. My dream would be to trade all of this stuff continuously throughout the day in a Robbins Cup and do 40, 50 trades. Doesn't matter. I'm just keep cashing all these reversals over and over and over again and being confident enough to trust them. And if they don't, I just paid a bit of information for the new direction. And I'd love to do a channel where, like, another dream of mine is to say, let's make $1 million in demo money. Let's start off with a $10,000 account and let's trade this to $1 million in a year in a demo. And I'll give you signals of where I think it's going to go, and then just trade using price action study. It's a bit crazy, but anyway, that's kind of, I love price action that much that I want to try and stay on the horse and ride that horse all day long. Like, yeah, I know if you're just starting out, you want to do one trade. If you're just starting out, one trade a day, just to practice at a specific time. Then once you understand price action with a level of accuracy like we're trying to show here, then you can trade more frequently if you know what you're looking for. That's a you choice, not a me choice. So when you hear 40 trades, you may think for yourself, that's over trading, man. That's way too much. Michael would say, you're nuts. That's stupid. That's way too many trades. We have two different ambitions. Just because he says it's right or wrong doesn't make it right or wrong. Everybody's individual. Everybody's unique. So, but for new people, you don't want to, you don't even want to engage in that. You wait for your ideal setup, take it, move to the sidelines, create the discipline to say, now, even though I've made some money, move to the sidelines and wait. Now I want to see these candles here hold support and go higher. We're getting 11 o'clock now, so the tendency is 11:30. Michael says it takes a run on the last low or high before, like on the 10 o'clock, after 10 o'clock. The last high taken, the 11:30, likes to run for that and then reverse. I think that's what was described. So looking at this candle here, or these two are embedded in it, I guess we could come all the way back inside to deep consolidation. I would not want to see it get below 26.63 right there. Bounce off now. I'm looking at this right here, this imbalance and this. Reverse imbalance, trade below it. We're back inside this range again. Fair value gap, fill, tap. We work through this, takes that candle out. We're back into a deeper range. Yeah, that's still, that's just closing well through the mean threshold of that candle. Come back up inside that fair value gap there and continue going lower, extending the range. Yeah, I was kind of hoping that would hold. I'm not trading it, but hoping this would hold, but it, well, it's from there to there. Yeah, it's come back up inside that. It's extending. That's the range you're in now. Fair value gap here. Order block here. There's the fair value gap. Not quite fill. Now you want to see that really start to accelerate back through here now. If that's the deep range and we did not get a full fill on that fair value gap, there's just a one handle or one tick short of that. And you see it bust through here, then we're back inside this range again. Fair value gap, imbalance up here. We get through that imbalance to the upside, then we're going higher. Welcome to a consolidated mess. That's a 15-second chart too. See how these wicks can beat you up in here? You can see how you're running inside these small, short little ranges from here to here. Extension, we break through it, extend the range, that little range there, back into this larger range. And if we take that candle out on the downside, then we're looking for a run back into this wick and a larger range here. Nice short reversal. You get that one, Craig. Just check the chart. We'll, hello, Lauriston. How you doing, buddy? No trades till it reaches the 1 hour gap below and gives bullish intention. Yeah, I'd like to see it reach right down into here now that we've got this fair value gap. We get a nice optimum trade entry reversal, or sorry, an institutional order flow entry drill in this hour. Just come down and tap below that, find a nice little reversal, and then start going higher. That would be a nice run. Mark, let's do it. That mental scar thing is real for men. Should have listened. Yeah, absolutely. Did you lose big on trade? Oh, I lost thousands of dollars trading way before my time. Like I literally paid for my education with real money, not demo dollars. And people, if you're starting out and you see people, you hear people on here making money and stuff, don't let that influence you, man. Stick with the demo stuff. Do not force yourself into live money until you know you're ready. I can't tell you, Michael can't tell, nobody can tell you when. And don't listen to anybody who says that trading demo is not the way to learn. Trading live cash it's absolutely retarded. And trust me, I've done it. Michael's done it. Everybody who's made mistakes that way has done it that way. And will tell you the same thing. Don't do it. It's like smokers, man. When they've been in it for a long time, they go, don't smoke. Because it's just, it kills them. Literally. And believe me, I've seen people out front of a hospital holding on to their IV bag, smoking through a stoma. Because they're that addicted to it. And they know they've just went through surgery. and they're standing there with an IV bag smoking outside the hospital because they can't smoke in it with their stoma. You're like, you're an idiot. So we take this low here. We've got a reverse here, went all the way through it, took out the lows, come all the way back through it to it. Again, premium. You're paying a premium inside that level to go where? Up to that little imbalance. The next one is up here. We want to see that pop through here and start running for that one. If it doesn't, it literally comes up here. The bodies hold off on that little imbalance right there. And this trades back in. Look for this big fair value gap to fill. You want to see this pop right through here and start digging back into this larger range and that little objective up there. And how do we get support on that? You want to see a body get above here, come back, find support inside that and this overlap. That fair value gap, this one, imbalance right there. See that? See how it closed above it? Boop. You want to see it come back in there like that and start accelerating. Mean threshold is your next upside objective inside here. You want to see a body get through here as well. See how it just tapped it? You want to see that really start to accelerate out of here now. And watch this mean threshold. Bang. See how it hits it? You get a bit of reaction off of it. Drive through it. You want to see this continue to hold in price now. Right there. You see how it's tapping on that, coming back to this. It's bouncing off these two. If it gives way all the way down into here, well, I guess you could use that. They're all lined up, one giant block that you could be trading inside. I want to see that push through here though. See how it just keeps coming back and tapping this old one from an old level we wanted to see it get through. See how it keeps continuously hitting it. That's why you cut through candles. That's why you can see these parasites that like to call you. Morons like that. Turn my ringer off. Internal range, stick with the internal so you see what we want to see. I want to see a body get above here, and that's just sitting right on it right now. I want to see that pop through, and we're stuck inside this. So see how we're consolidating inside that fair value gap. Use it to get higher or use it to go lower back inside this range again. There we go. See that? We're through the mean threshold. Come back, cam model 1, look for that upside objective. Cam model 2, fulfill. You want to see that stay open though. You don't want to see it start digging back through here because we've just taken that high. That creates a fair value gap. These become two important order blocks now for this to run back down into here. This could be the next consolidation piece all the way back down and staying inside this larger range. And you go, ugh, now we're back inside this range again. If we break these lows, we're back inside here. I want to see this stay open for aggression, for a solid run up. I want to see that consequent encroachment stay there. I don't want to see that go any lower than there. And if it does, and it fills, that loses its luster for me. You know what I'm saying? Oh, I haven't even looked at any of these other ones. Oh, I wanted to get back down into this level, didn't I, for oil? And look, we're right in there. That's a full fill. Now, look for a reversal on the 1 minute chart, and there's nothing there. There's no reversal on a 1 minute that I'm interested in for a long. Consolidation, we get a nice displacement candle, get through here, different story. I want to see a big bold candle, come back, use consolidation, to start marching through here. And once you get through that break market structure, use this candle to go higher. Your ultimate break in structure is up here. This is the first one, second one. Cam model 1, here, here. Those are your objectives to start aiming for. And then you can start running up way into this delicious piece of price action up there. So keep your eyes peeled, Craig, because you've got, well, looks like you're getting a nice little setup starting here. There's a reversal here. See how it takes out that low? Comes all the way back inside it. It's a pretty nice little entry right there for a long. I think that's what you were talking about, Russell, wasn't it? That high, that low, reversal, body trades above it right here. You trade back into it right there. So 78, 70.87. Catch a run, put your stop down here. As soon as it breaks that high, move to break even. Look for your range and let it buck now. We get above there. That's the next level. So you may be saying, well, I want to see a good, decent market structure break. If it returns back into here, for me, that's inside that range. You've got to break this to continue going higher. Otherwise, it's just a run back up, fill the fair value gap, roll over, and come back down. So if you're using your fib tool, you're paying yourself handsomely. And if it makes it all the way through, you leave a piece on and then load up again once you get above here and aim for that next range. And make sure your stop loss is at break even. See how that we didn't break this low. We came back into the consolidation, going higher. Look for this imbalance. See that little imbalance we talked about up there? See how it hit it right on the money, reacted off of it. Back to the order block, find support. Now you want to see this eat through here and go higher. Let's have a look at some of these other ones we've been studying today. Bitcoin objective was hit. Look at that, right on the money. Love it, love it, love it, love it. That was our call on Bitcoin today. It hit it. We went higher in ES. Got a reversal here. Body trades below it right here. You trade back up inside it right here. There's a perfect entry for a short right off that low. See how we hit it again here? Extend all the way back down into, do we take this objective out here? It hit it on a close. Then it went back up inside and we hit off of, there's no objective there other than this candle here. And then ran the lows out, and we have not had a reversal yet. So you're looking for a continuation in a larger range now. So you've taken this range, now you want to extend from here to here. And watch your fib tool on the way down. Or look for specific arrays that you want to see take out. Copper. Oh, we said we want to see copper get back into this order block. It did. Now I want to see copper just start reacting off of here. Unless it closes on the hourly and it comes back into here, taps it for institutional order flow entry drill, leave that open, and then start going higher into that range. Crude oil. Yeah, I'd like to see crude oil start climbing up out of here now. It's come back, body's come back, tap this old high here. You want to see it keep moving. S&P, natural gas, and right off that high, we're back inside here. If we start digging through this level again, we've got a swing projection for a deeper rundown in soybeans to the new week opening gap down here. We still got this wheat on the downside we're looking for. If we get a reaction, internal range, liquidity again on the larger range. If we bounced off the lower one, we come back up to this internal one. There's one small one right here. That's where you're looking to run 22.35 to whatever that level is up here. So the small box up inside this range, I'd be putting a small box in here. I'd like to see that react off of here now and start going lower. We're looking for the live cattle to retrace. It's been retracing. Whether or not we get back to here, all this is good inside this wick here. As long as it stays inside that and keeps going higher, I'm happy with that. I want to see that little piece at the bottom stay open. And we're just shy of our cocoa objective. We're just coming back into that candle again to go lower. Lumber, getting a bit of a rise here. Nothing significant for me. We are kicking off that breaker still. We're finding support at the breaker, and the hogs are on the way back down again. So we want to see if they get below there. So far everything's kind of working out the way we wanted it to. We are hitting that upside objective now. This is what we're calling for. Here, here, here. We called all this in gold this morning. We wanted to see it get back into this level. Trades through, hits it. Now you're extending for the last 2 hours. We're looking for that to run up for these highs here now, and those objectives. We called it, folks, like a demon. And our objective here, we got a body trade above it right there. Came back and give it a kiss. Take me to the prom, baby. Run back up one more time onto this old high here. The wick, you don't want to lose more than 50% of that. Body's above, comes back in, fills the fair value gap, and away we go. I'm moving my stop loss into break even now. I'm with you, Craig. I'm off this candle right here. I got in right there. And we're looking for upside objective now here, and see if we can get through that. We're on a tear, Craig. We're on a tear, buddy. NQ still kind of Nvidia. We're still looking for Nvidia to make that run up higher. That's all good. And we so far hit exactly what we're looking for. Yesterday we wanted to see it close above here. Today we wanted to see it come back, tap it, and go. So it's come back, it's tapped it. Now you want to see it run back up through this range here for this GitLab. Anybody else got one you want me to look at? I'm going to replace GitLab because that was yesterday's. You'll have to remind me if we hit something that, so far we're nailing this, man. We're having fun. Having fun in the sun. You get that one, Craig. Just check the chart. Hola, nice trades, blah, blah, blah. Totally true. Did you lose big on the trade? Totally true. I'm on the verge of getting on track, but still my greedy dragon beats me most of the time and almost everything I won. Yeah. That's a demo lifestyle you should be living right now there, Edgar. And the more you get influenced by what other people are trading, the more it takes your focus off of yours. So sometimes you need to just get away from the charts, get away from us, and get away from listening to all those people that are yakking on the side saying about how much money they're making, and their focus is on money instead of focusing on their trade. Your focus should be entirely on the trade setup for something that's clean. You want to see this come back into here now and use this for support to go lower. And we're going to dig further into this hourly one. Again, you're looking for that potential institutional order flow entry drill on the hourly. See how we hit that going lower? So you want to see that come lower. Take out this low. Watch the 50% of the wick. See if that supports price. You've extended that range again past here and here into the larger range. Now do we go beyond that range and get a reaction off that? So yeah, I feel for you, Edgar. Just take your time, buddy. Don't rush. I have done it. There is no rush. Where is my carrot to bring me my money? Ron. Your carrot's down here right now. We were just calling this level down here. There's where your carrot's sitting. I'm looking for this. And then you look for a new carrot on the horizon up here. That swing projection, remember I was calling that swing projection? If it took that out, ignore that. Ignore all this crap, so ignore these carrots for now. We're just looking for institutional order flow entry drill. Right below that hourly. Take this wick. Pull your fib tool on the wick. Put your quarters on. See how it acts inside those. 50%. See how the 50% is holding the candle right on the body? Wicks do a bit of damage. Body's holding right at 50% of that wick. Now get above here, and we're looking for another run up higher. A little tiny reversal right here. Body trades above it. Literally just comes short of hitting it. So now you wait for that candle to get taken out, or find the next one, which is sitting right in here. Get a body above that, come inside here, and then start looking for that structure break to go higher. If it doesn't, if it just comes back inside this range to this little breaker that takes out these lows, then we're looking for a run right through here and look for senior carrot down here. Right now you're inside this range, so you're looking to climb higher. You need to climb up out of, there's a little imbalance right here. This fair value gap, you want to see that half of that stay open. And you want to see it march above here now. Come back, find support at this. And push through here. You got these two are battling now. Hold and give way. I have done it. There's no rush. Carrot, bring me my money. I've done it. As Craig, been trading mess on a short side 3 times, 3 stop outs, 2 green, 1 red light, slightly red overall. Back to crude oil. Yesterday I mentioned that it was a buy at 400. Broke my own rule. Now I'm swimming in blood. Oof. Breaking your rules, man. And the worst thing is when you break your own rules is that, see how that's supporting price right now? That candle. I want to see that hold price. Also, this fair value gap supporting the idea that that could hold price. And we're battling. See how the mean threshold? We're battling these two. Who's going to win? Who's the stronger of the two? What shall begin? We got to break that for a continuation. It's slipping in the mud. I can see the soldier's feet slipping in the mud. Oh, we want to let it hold. You must hold. You can almost hear the Braveheart music. The pipers are going. And they're slipping in the mud. Hold! Hold! If she rolls over and we lose these, lad, pull back to the keep. Pull back to the keep. Yeah, sorry, EK. Sorry you're losing that, man. Stay with your rules. When you're bored, what do you think of Tesla now? What do I think of wee Tesla now? Oh, we're losing this to the downside. That's not good. We close below, tap it. We're coming back into that range now. We're slipping. Pull back to the keep, lads. So we did not break the structure on the high. If you're trading internal range, not that we could have caught that, but that's the little range you should be trading if you're inside here. If you're pulling your fib from the too high and you didn't get back to 50%, I think you would have at least hit 50% on that. That's a quick way to get yourself out of a trade. You're in the wrong position for it. We haven't got a body full below here yet. We just got wicks. Oh, there's a body there. Yeah, we're still coming back in here. Look for that little imbalance down there, right there. And this little guy right here. If we pop into this, ooh, that's a nice little reaction. Did I flew this? I can see where we are. I can see where price action is staying right now, and we're bouncing between this order block here and the potential to run down to the little tiny box I would put down in here for the magic box. Yeah, for it to run to, because we're in a small range here right now. But let's go back over to our oil trade. Oh my goodness. Now let me check my trade. I haven't even looked at my... I'm just locking in profits here. We're locking in profits. Craig, did you get in on that trade? The one I gave you here for oil? Did you catch that sucker? I got in on that down here. Did you catch that for a nice little run? This little poppy right here. It's a nice run. Fill, go. I want to see this still hold price. I don't want to see it come back in here anymore. My stop sitting below this low here now, because I don't want to see this give way. If it gives way, then we're looking to run back into that range, and I don't want to give up any more profits than from there to there. So my stop is sitting right there. You were saying Tesla. Was it TSLA? Tesla? Broke the high. That's lovely. Found support inside here. I like that. So if you pull your fib to or your box here, excuse me, we traded above it. You want to come back and trade back inside it. We'll actually gap down inside it and then ran the highs. So first objective hit, mean threshold of this candle. We're eating through that already. So next objective is 2271. 59. So that's what I'm seeing in Tesla. See how we pull back to the keep and you lose to the downside. You come back in and the lever. We're going for the carrot. So dig it down, lad. Look for the carrots. Dig them out. Aye, there's your carrot. I see it now. You can see how that little drama unfolded. Yeah, I know. My head. It's the way you look at it. Eventually, when you see these candles, you have to play it like a video game. Pull back to the keep, lads. And then you want to see, when does the keep fail? Ah, damn. Everybody run. Every man for himself. Leave the women behind. Run. So that's your that's the ICT movie style candle watching. So here you're looking for a reversal now. This is institutional order flow entry drill. Not yet. We want to see a setup down here on the we're in the range now for one of those. We finally popped below that low that we were looking for. Right? That's done. So now you look for any opportunity to see a long, to get back into this sequence of running higher now. Yesterday I mentioned when you're bored, Tesla. Yeah, I'm not bored, but I'll do Tesla. If there's anything anybody else want me to do a stock or something you're interested in, you want me to look at, we can do a quick analysis on that while we're waiting to see what's going on with this chart. We're getting into lunch hour now. A reverse here. There's a body above here. We retrace back into this. Lows here. Not a market structure. I want to see this structure break above here. But right now, if you're looking at the small range, discount array here. Can you explain the fib? In what capacity would you like me to explain the fib? How it's used, when it's used? See how the body's going below that? It's taking the low. Wait for another one. Again, you want to see market structure break, otherwise it's just a little swing. It's a reversal, but not a swing reversal. The fib tool is like, let's say, for example, who was it was asking? Gibbo. Gibbo, if you're looking for, oops, I want to look my fib tool. If you're looking at this range that you're in right here, let's say we would have got in on a short or long here. To get in here, the fib tool, you use the retracement. This is just this isn't a Michael thing. It's just my way of managing, trying to find a way to help people who don't understand order blocks, breakers, mitigation blocks, imbalances, and fair value gaps and inversions and all that stuff. And you're in a range. Here's how the best way I've found to protect yourself using a fib tool. And it will be something like, if this was the reversal and you decide to get in on it, this is the first range that you trade. And that's the second range you trade. So let's say, sticking with the rules, we'll say here. So now you enter into that. Let's say we got in here. Stop loss goes down here. You enter in. The moment it hits 50%, you move your stop loss to break even, take half your trade off, and wait. If it moves to 62, grab your stop loss and slide it up to 50. Take a portion off at 62. If it runs up to 70, quickly grab it and drag it to 62. If it makes it up to 75, quickly pull it up to 70. Pay yourself. And if it hits 78% and it doesn't, it hits 75, comes back and takes you out at 70, you're done. That small little range is traded. Move to the sidelines, high five yourself. Your rule worked. If you pulled the higher range instead, you got in down here, you get to 70 or 50%, which is right here. Pull your stop loss to break even, take half your trade off. It doesn't hit 62, literally comes all the way back down and takes you out here. So half the trade would have taken off there and the other half would have broke even in a range where you're offside. And you know you're offside when it starts to trade below that. Oof, comes down, would have taken your stop loss if you stuck to the old methods. So that's how I like to use a fib tool. Even when you're on the wrong side, it can save your ass, because most times in this range it will trade back to 50%, and that's your guaranteed break even, half your trades off in a small range, if the algorithm's acting the way it should act. We have a little top below. So far we've got relative equal lows. 40, 12 o'clock, we might take another run on these one more time and then start to go higher. But right now, look for this to provide support. If we lose this candle on the downside, we're still going to keep coming a little lower. We have got a reversal here to come lower still, and we've got this reversal to go higher. And it traded through us, took the lows. You got this one here when you break above that. You did right here. We come back inside it right here. Now you want to see this one hold to go higher, and you want to see this one hold to go lower. So you have overlapping arrays, and we still don't have a major market structure break yet, which would be above here. How's the oil doing? Oil's come all the way back up and filled that. Oof, I should get off my trade because that's a good place to. No, I'm moving up a little higher. I'm still looking for that to provide support now, and I'm looking for this candle. Its body to hit is 71.97, mean threshold, rejection block, and I only have one lot on that, so I'm only I can't break it down. So I'm literally trailing my stop loss up on a lower time frame, managing it this way, saying if I lose this on the downside, this support on the downside, then it's going to take my stop loss. So that's where my stop loss has been trailed to. It's a logical level for me, and I look for these little potential reversals that if I take out that candle on the downside and get back into here, I have to decide whether or not that is just my downside objective to hit to go higher, and how much am I willing to give up of my profits for that. So ideally I want to see this little imbalance right here, find support and push higher for these relative, well, these equal highs that are above us. So that's how I managing my trade here. So this is good. So we've closed above this level, went above, come back inside it perfectly right here, looking for it to go higher, wait for market structure break. We're just inside this internal range liquidity run now. Mark, the fib, how is it used? How is it used when? You got that, Gibbo, now? Good. What broker you use for your personal, and do you manage from TradingView? I'm not going to share broker stuff with people. Your broker's entirely your choice. It's entirely up to you. I'll tell you this, some people have found some good use with AMP. That's the one I'm most familiar with. So you decide. That's a personal thing. You guys have to decide which broker. I'm not going to promote any specific broker, but I have heard some nice things about AMP. You guys can discuss that in the chat section, whether you guys use it and who you use. So far you see us climbing out of here. I like this order block here now for continuation to the upside. Wow, we have 39 people and 40 likes. So see how we've taken out that high, reverse here, trade below it, trade back up inside it, inside the range now. Look for down here, and you want to see if we find support at this level. Now you want to see this start pushing back through here. Otherwise, discount array, you want a discount to go higher. And if you lose that level, then you're looking for a run below the low again, and then back into the carrot. So I want to see that provide support there. The range here. Back into that fair value gap. It didn't take out a low, right? So you want to see something that takes out a low. This did not take a low. This did not take a low. But I want to see this provide support. At least that first candle there. I want to see some sensitivity off of that. Come back, fill this fair value gap. The second one, when you have two in a row, Michael likes to talk about the second one's the one that gets hit. There's their second one. So now you want to see if that it's going to hold price. We'll trade here. There's a little imbalance there. You see that? Now we're trading through this, so going for the lows. And sometimes you can get a candle just rip right through and take it out, right? So you can see where the reversal began. Took out a high, look for that, reverse. Now you're back inside this range. So if you're long, you get yourself, as soon as that happens, you go, I'm out. I'm out of my long because it's now going short. I'm back inside this range. This one particularly, if I lose that on the downside, now I'm going further into the next range. And if I lose that one on the downside, I'm going further into the next range. And if I lose this one on the downside, I'm extending the range and we're heading for the carrot. Which isn't bad when you're considering if you get short right off of there. If you go, oh, I'm on the wrong side of this now, quickly get my trade out and go short. Again, that's the discipline you have to recognize that, or confidence to see that it's going to work. And then you move to 50%, move your stop loss to break even and let the rest ride. Right now you're back in the carrot. See how that each one of those failed at a level that you go, if that loses that and we take this candle out on the downside, I'm on the wrong side of this. That's the candle I look for to get support to go lower. And you see how the body right here traded below it, and we literally came back inside it, gave it a kiss on two candles and ran lower. That's the one that's staying in price action on the horse. You got to be quick to recognize this and the change in direction and the opportunity that you had to get in or out of your trade long. If you're all heading for way up here again, you always have to say, what have I taken out a high? Yep. As soon as that high is taken, you see this fair value gap forming, and you go, is this going to be the one that trades back through? Nope. Oh, there's another one here. Is this going to be the one that trades back through? Now we've taken out these highs. No, we're still going higher. Well, if you're long on that, you're going, yay, I'm trailing my stop loss up here now, because if I lose this on the downside, I'm on the wrong side of this. So you see it go up above those highs, and you see an order block form and a fair value gap. You go, my stop loss is here, because if that fails, that tells me I'm on the wrong side, and it failed. So your stop loss would have been taken right there. You come back in, you go, good. Now, if I use this counter for a short, my stop loss goes here. I'll start marching it back the other way. Again, you have to have the discipline to recognize that. You have to see it enough times to convince yourself that that's what's actually happening. And now that we've traded below this low, we use the low. Is it going to give us a level of support to go lower, or this box right here? Is that providing a level of support to go lower? So anywhere inside that box, keep coming lower. Does that make sense to you guys? Like, I don't want to seem like I'm form-fitting it, but it's exactly what I've been talking about all the time. And even though it's hindsight, it is exactly what I would have been calling had I been actually watching it at the time. So we're in this nice little bull flag. My level is still being held here in oil. We've lost this level here. So this candle becomes important. If we start to trade below it, like I mentioned earlier, then I start to get a little nervous inside this range. And you say, how much am I willing to give up? Remember when I was saying, how much am I willing to give up of my profits inside this range to accommodate a potential run back into here just to go higher? We lose that on the downside close. I'm going to close out my stop before it gets taken, because then I'm thinking it's going to run back through here. And yeah, it could turn around and go back up. That's fine. If it takes out that low and gives me another fair value gap for reversal, then I'll take that for these equal highs. So see how this is all lost profit now. And there's the reversal. We've traded below it. You come back up, and then we went above it. You go, oh, I need to see a market structure break. And it just did. So if it comes back up in there, again, the debate now is between short and long. And we've hit a higher time frame objective. So we could see that as a reverse. Matter of fact, I'm closing out my trade right there. We'll move to the sidelines and we'll wait for something cleaner. So whether or not, see whether or not we trade through this, or now it decides to go, Darren, you should have stayed in. I'll wait till it gets above that structure there and then run for the highs. So did you see me stressing out over that? Worrying about it? No, I've got my reason. I got my fail safe. Fail safe's important. Stop loss, fail safe. Fail safe tells you your stop loss is about to get hit. And if you get good, you can use your fail safe as your stop loss if you're absolutely sure that you trust your levels. And we're getting close to lunchtime. We took out those lows one more time. It's what we were expecting at lunch. So 12 o'clock. We'll give it a bit of carrot. And then I expect to see 12:02. The 12:02 candle in terms of minutes. Give me something. Reverse order block, body, break-in structure. You want to get through this. This is a cam 3, cam 2, cam 1. If we get above that. Body's hitting this here now, going higher. I want to see that really start to push above here now. I like the support off this candle, and I like to see this stay open, start pushing higher. Give me a nice displacement candle. This is consequent encroachment here. You want to be in the upper half of this consolidation. Oh, sorry, this BISI. Nice displacement here, would be nice. Lovely. Come back into the old highs here. I like that little gap. I'm long off this here order block. I like this, the fact we stayed open here, so I just got long right off of here. Looking at inside this range now, you pull your fib tool from here to here. If you're managing this, watch for here. If we lose this on the downside, I'm on the wrong side of it. We have another big dig right to the order block here. You want to see this, again, the lower half of this fair value gap stay open. Otherwise, that order block, we've taken out these highs here. You see that reverse right here. Trade back into it. You're looking for that old one inside this smaller range here now. And I don't like seeing all that candle down in there. So that's a potential for it to come down inside that range some more now. See that here, right into that fair value gap. Snap off that. We may have one more time for that 1202 I was telling you about. If 1202 runs that low, it's 1201. Right back into that little box inside here. Premium discount. You want to get the premium above premium now. See that order block there? All the way back inside it here. Premium discount, 75% retracement into that range. Like pull your fib tool on that. You'll see that's an optimum institutional order. No, optimum trade entry reversal right there. Look at that, 75%, 70% optimum trade entry back to this order block here. You want to see this give way now? The upside and go along. How many people were sweating that one out as soon as you see that low get taken? You think, ugh, okay, what's it coming back into? That order block there. If this is really going to hold price around time that we want, you want to see that upside get taken now. I don't want to see it revisit down here. It's done its damage here. You want to see it climb out of here now. I hope that makes sense to you guys. So my carrot's up here now. My wee box. My wee box I'm looking for is up here. Here it is, lad. Want me wee box here. Come on then. Come for a bit of carrot. Again, watch pay yourself at rejection block. Pay yourself. Or move to break even, whatever technique you want to use. Got Meatloaf Bad Out of Hell going through my mind. Living the night, the one night together. So we don't. So keep going on. Like a bird out of hell, love it come when the mornings come. Okay, this is a little guy right here. I want to find support off of here now. The day is gone and the sun goes down. And the moonlight shining through. And like a sinner. Look, you guys get all this free market stuff, and you get me serenading you guys with a little meatloaf. So now my trade is now break even. So because I don't want to see it take this candle out on the downside here now, because anytime we break out these new highs, I don't want to see this candle go. So I'm at a break even, zero stress trade. If it comes back and takes me out during lunch hour, I don't care. I'm not losing anything. I'm just going to see if it runs up to our objective, and if we can reach through that and take out higher ones. We've got our institutional order flow entry drill for continuation to the upside, and this might be the run now that takes us higher. Who knows? Who knows? There's our 1 minute, 2 minutes continuation to the upside. Let's do live cattle, says Russell. Let's go to the Moo Zone. The Moo Zone. There's live cattle. I want to see 50% of that wick, and then look for a reversal on the lower time frame. Any opportunity you get for a reversal now, today or Monday, if we get a retracement in Monday, Tuesday's low, you know, we talk about Monday or Tuesday makes a low of the week. If that's our Tuesday low here, and then it runs higher, that'd be ideally what I'd like to see for a continuation to the upside. But, you know, you always have to keep in mind that this could be a Monday, Tuesday high and then run back through here. It doesn't feel like that. It feels more bullish. But again, I want to see a really bullish for me would be a hold up on that wick. So far, we're banging around back in that box on sugar. So far, coffee is still heading where we want it to go. We're getting a reaction off of here, that line. I want to see if we start driving down now. I want to see the bottom of this fair value gap give way, find support, and we're looking for these lows and run back down even lower still here in soybeans. That's just sitting flat. Anybody else got another stock you want me to look at? The symbol for cows and stuff. It is LE1. It's more like live excrement. LE, that's the cows. Live excrement. Oil. See how we got that reversal? That's why as soon as I saw that, I think, I don't like to see this candle go on the downside, because we have hit our upside objective already, even though there's equal highs above us. See how we gave this away here? Popped down below it and then finally ran down. It would have taken my stop loss. So I didn't like the fact we lost that one there. So Stop loss was here, fail safe was here, and I took it anyway up here because I didn't like the way we ran through a candle that supports the reversal on the downside. Get out there. That's my rule. So now we're back inside this this range. Now you got this. Do we kick off of this and start eating into the opening of this candle at 71.22? Look for a reversal off of 71.22. Look for a reversal of a rebalance of this candle here on the hourly. And look for a reversal off of the mean threshold of that candle. Go higher. See, that's the upside objective. We hit it. Now I want to know, do we come back into this one before going higher? Right now we're bearish on the 1 minute. And the 5 minute, nothing on the 5 minute really. Did that come down and take me out? Oh, that came close. That came close. I was like literally just below that stop, that candle there. My stop is still intact. Now I'm moved into paying for the trade because we got this here. We've taken this out here and we've traded back through it. So do we just get to here, reverse, and then come back down again? Or do we use this to leverage and go higher? It's hungry. It's lunch hour. Let's feed the carrot. Oops. Let me undo that one. Oh, they're overlapping. It's hard to get my carrot. Come on, baby. Come get you some carrot. Now we want to see support here. I'm going to give myself some money here. It's lunch hour. What do you say to yourself? Now you start saying, where does it fail for me? There is no failure. There's only feedback. Oh, yeah. So institutional order flow entry is looking good now. It's looking good right now. If we can get above this here candle for a nice good break in market structure and use that level here for some support. Oh, we got some carrots above us. Did I say we had some carrots back here? We got these yummy little carrots. I think we have to bring those over. Not that we're going to ignore those. But now, my friends, we have something more delicious. Oh, can you feel that, huh? That's an Ace Ventura moment. Can you feel that, huh? Together. So it hit it. Now you look for your, where does it fail for me? Back in here. So stop loss. So my entry was down. Where was my entry? 616. So I'm down here. It's my entry. Off here. Now I want to see this. My stop loss right now is sitting below here. Out of that large range there, am I willing to give back a lot of profit to see that go higher? But that was, and I only have one lot on, so I can't take more off. So I'm above break even. I make a bit of profit. I want to see if that holds. I don't want to see it rip all the way back down against us here. And it's very likely to do that during the lunch hour. Oh no, it wasn't. Sorry, it was at 6:32. That was my stop right here. I don't want to see this get taken that to the downside, come back, find support inside here. That's where my stop was. It's at 6:32. Sorry, it wasn't down here. It's up here. So we're inside this range here now. And the down box is what the little magic box I'd be putting would be right here. And if you're putting your fib tool on this on the way down from that initial entry from the reversal here, 50%, you break even. You didn't get 62, take portion off, and it comes back and takes you out. So you literally would add half your trade off there in about 5 handles. Now what I want to see is, do we continue using this candle to go lower? And do we just, for lunch hour, at 12 o'clock, it likes to run up and then just give you one more little sweep below these lows for the people who are trailing their stops like I was doing. If we take them out one more time and then create the reversal and keep going to drive through this box. But we just came right to the box and then stopped. But that's that bait and switch, man. Bait and switch. That baits you into going longer. You got to pay yourself there. How much of your profits are you willing to give away inside that? I didn't want to see a break in structure here. It did. Now we're using it. If it runs through here now, you got me. I'll wait for a break of this to get above here and then go higher. And I want to see this being used now as leverage to extend this range. But if we just get another nice little wick back in here, got a level right here I'm looking at now. See the fib tool in here? And extend. So you're in the middle of that range, larger range, and this little range here, as soon as you start to reverse, look for it, the 50%, 62%. Is there anything logical that it could bounce off here to go lower? We have a little imbalance right here. And we have a fair value gap right here. There's a little imbalance sitting right in here. When you stretch this out, you'll see it right there. You see that? See these? Back inside them. This is what I want to see. This is good. I want to see it dig down into here. And you can see why oil, if you have your rules, you follow your rules, you can save yourself a whole ton of agony when you start to notice these runs, even though they're equal. That high is taken with that high there. So look for this little imbalance. If you stretch these right out, you'll see it in there. Those little imbalances, when you trade below them, you think, oh, if we lose this candle on the downside, I'm on the wrong side of this. And you did right there. One more time, I'm out right here for the run back into the range. Again, you got to get real confident about when you're reading those and you're looking at the higher time frame hit there. You think, oof, that could be just a snap off of that back to this order block, looking for a reversal in that high. We talked about the open and the mean threshold. There's the mean threshold. So here's the 1 minute chart. What do you want to see on the upside? We have an imbalance right here, right below that low is taken, imbalance. We literally opened on it, traded back into it, went higher. We have an imbalance right here, above it, come back into it. You want to go higher. So you're inside this small range now, discount, premium. Because if it rolls over on you again and goes lower, at least you're catching yourself a little bit of a run back up inside here. So if your stop losses up here like this, if you're in on that right there, you're in the discount. So as soon as it hits 50%, stop loss breaks even, take part of your trade off. comes back and takes you out, right there, you made half on your trade there inside that range. You've got to break this for a break-in structure to go higher. So inside there, you're now at a zero stress trade. So you just sit there and go, well, I took a little bit off there in that like 6 handles. Now if it hits 62, I'll just move the rest of my trade up here and I'm at 100% in profit. I've paid for myself. So you watch. This is just an example of how to use the fib tool. Okay, so if that was the entry there, we're in a discount inside this range. It's an acceptable level to get your profit in. Stop loss is down here. Hit 50, whammo. Stop loss goes right up to wherever you bought that in there. Take off a portion here. And if you're about to hit 50 you're at break even. So you got a chunk taken off there. We're waiting for 62 to get hit. Again, I'm just showing you, because if you're on the wrong side of this, this is how you kind of save your ass real quick. So right now it's a zero stress and you've taken off half your trade and you're moving into break even. Bang. Now you move to 50%. Now you've made half your trade is 50. The other half is guaranteed profits. Take 10% off here. And wait. So like for example, if this was your stop loss, you'd be sitting here like this. And as soon as and you got a hold of your little stop loss counter, you've paid yourself 10% there. This is the optimum trade entry reversal potential. So you paid yourself 10% there. If it comes back and takes you out, half your trade's off there, 10%'s off there, and the 40% that remains is still in profit. Bang. Now I take my trade like this and I go boop, and I move it up to 60%, 62%. And if you've got a limit order, you can put a limit order sell at 10% there. And if it comes back and tags us out, now that trade, the 40% that's left of my trade or 30% that's left of my trade is sitting right there. 10%'s taken out there, and now I'm out. And if it runs through, yeah, just wait for the next setup to go higher. But you paid yourself in here. If this reverses right now, you'll see how you can be on the wrong side of it and still make a bit of cash on these little reversals. And if it runs through, who cares? Don't beat yourself up on it. Just say, I was taking a risk, trading in a small little range to 50, 62%, because if it reverses on you, you'll go, oh man, that works. Magic. Saved my ass because it traded against me. Does that make sense to you guys? That's how I use a fib tool when I'm seeking internal range liquidity. Yes, these are important levels. Yes, those little magic boxes you see me putting on there, but pull your fib tool there, especially in volatile lunch hour markets where it can turn on you on a dime and you want your risk to be reduced. That's how I do it. Because the algorithm will tend to take a small range, trade back to 50% or just above it, and then start going lower. So here's how you manage that. If there's a reversal there and it's in a discount, here's how you quickly manage it. As soon as it hits 50, you're right at break even and take a chunk of your trade off. Because if it reverses right there, remember, see what it's doing? And we paid ourselves right up to 70%. So you'll see how that, if we're on the wrong side of it. Now, if we get below this level here, you can say, all right, get back in sync with the market. We know this is going for the lows now. So if these take out this little imbalance down here on a close, come back, find support at it, we're out. This one here, if it comes, once you've done all that, if it comes back to a discount again and gives you an opportunity to go long, you go long. And do the same thing, 50, 62% inside that whole range. And that's buffering, what I used to call buffering. I don't know why. In other words, it buffers any losses you would have taken here. And you're paying yourself in that small range. You just keep paying yourself small range, small range, small range. So if it came back into here, you took that trade initially here, take that trade again there, do the same thing. 50%, move to break even, take half the trade off. 62%, pay yourself. And you've just gone once, twice, and you're collecting 10 handles, 20 handles, whatever, inside a range when you're on the wrong side of it. Not that that's a very smart strategy, but it is a model that I acknowledge is possible, whether or not you use it. So, for example, right here, if we do that one again, right, this was our so it traded above it, came back into it, gave you an option to go high. So as soon as it hits 50, move to break even, 62, up to 70, we paid ourselves. Came all the way back down, give you your trade again, hit 50% here, take half off, move yourself to break even again. It hits 60, take a 10% off, 20% off, 30% off, 40% off. You got 10% left riding, and you're just moving your stop loss going doop, 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 all the way up here now. And you've already paid yourself once in that small little run. You started it all over again, and you're running back up there. And that last 10% you leave to run above here, and then you can reload back on some more to go through that higher, expecting this candle here to hold price. Does that make sense to you guys? Am I being a bit ridiculous with my fib tool? Your opinion's important. Let me know. Now that 62% has been hit, did you raise your stop loss to 50? Exactly, Campione. So when I did that initial, oh, sorry, that's oil. I'm in oil doing that in oil, sorry. That was oil. We finally broke through here. See how it took me, I came back and I had it, where did it take me out there? Where did I get taken out? I took out at 32, literally came back, took me out, wicked through me a couple of more times, and then finally went higher. While I was yakking about that other one, here's the option, took out the lows. Here's the reversal. Body trades above it right here. Trades back into it right here, or I wait for this order block. Trades above it, comes back to the order block for continuation. I missed all that while I was yakking about the fib tool. So I didn't get an opportunity to go in, but you know what? I've made profit off of oil and NQ today, so I'm all right with that. Reverse, watch breaking structure. Gets below here, look for this run back into here again. I hope this kind of helps you guys to, and that, thanks Steve for the week. Have a great weekend. See you later, Craig. If you like it, hit the thumbs up. I appreciate your likes and stuff. It's all valuable to me. I like all your feedback, provided it's positive feedback, by the way, or constructive criticism. I don't mind that either. US 30, please. US 30. You like the Dow, do you? Let me have a look at the Dow. Dow. I would have liked 42,521. That was a beautiful return to 42,521 for a long. take out those highs. Now, if we can stay on top of 42,535 right now, and start climbing from there, breaking structure is to take that high. I like this level right here now to go higher. So yeah, I like that level there to go higher in Dow right now. I like the 42, the one it just hit. And then you're looking for 42,560. Look at the wick, 42,565. If it takes the high, that's great. If we get a nice little pump up there, I like that. There you go. So I'm higher in Dow Jones as well, right off that moment I just gave you there. Was there a way to catch Tesla earnings pump yesterday playing calls based on the chart? Like an options call, you mean? Let's have a look. Let's play this. Let's play options. Playing options. Yesterday. Yes, there was. Can you see it? It's like freaking laser point accuracy. Can you see in here, where's the laser point accuracy of an entry? And you trade options on that. You go, oh man, if it comes to here, I'm going to sell, I'm going to buy longs like a call, like an open call, just take the call to go higher. Or I'm selling puts, or buy the stock and sell covered calls higher and higher and higher, or sell shorts, puts on your covered calls right here. So you see this consolidation, we break above this and you go, if I can get into this consolidation or above into this old high here, these old highs, I take it for a long. If it gapped up here, and then if it doesn't, if it gaps up above the gap, I look for this right here and I go, have we traded above that? And do we get an opportunity to get back into this to go higher? So you literally opened right here. See, we haven't traded above that one yet. We look at this one and you go, if we come back to here, right there, look at this candle's high. It's 24278. Look at this candle's low. 24265. It gave you 15 cents to get in, and off to the races you go, aiming for that high at this fair value gap here. Now you say, if we get above this level right here, or this gap here, if we can get a retracement back into that gap, once we've taken out that high, if we can get a retracement back into that, I could also sell that long. Gap in, and boom, you would have caught that one on, was that today? You would have caught that today for a run higher. So if you look at this, you say, oh, if we can come back into here, well, it literally opened this morning at that level you wanted to go higher. So there's multiple option trades you could have taken in here in Tesla. That's a 1 hour chart, by the way. Not that that's any financial advice. It's not for demo balling it. It would have been fun to play. I can tell you, I took a $100,000 pretend account years ago when Tesla did it using the same technique, and I got over $100 and somewhat million. It was awesome. So paper trading and imaginary everything using this technique, shit balls, it was so much fun. Anybody else got something? I don't want to hog everybody's time. I've got a couple of other options. If you're looking at something that's interesting, let me know. Oof, we got that reversal. You see that right there? Take that out on the downside. So if your stop loss is being trailed up in here, that's the reversal, takes you out. And you go, oof, now if we close below that and come back into that, I'd like to see it. It's short looking for these lows. It didn't. It took out the next one right here. And you go, does this consolidation now get attacked from below? It is getting attacked from below. continuation, look for the downside box. My downside box would be somewhere in here in that order block, which is buried inside those guys there, I guess, which is what that came down to right there. This could be nice if we can get through this one more time, get up on top of it. You have to eat through these candles. You're inside this range. Look for that support back inside here. You literally have to look at each tiny little range that you're in. Carrot, carrot, carrot. Don't forget the carrot, he says. Let's get the carrot out of there. Where's my carrot going now? Right now, we're still looking at downside. Got support off of this, so I think downside. We get above here, carrot goes back up inside this range. It's got to get above here on a close before the carrot moves back into this range. Otherwise, this is the next price leg down. Thanks, Steve, for the weekend. Again, I was referencing the 1148 to 1156 range on NQ. 1146 to 1152. 1146. What is that? 1148 to 1156. Like 8 minutes? Here? 1148. Oh, here. To here, this range. Oh yeah, we've already got through that. Now we've worked through it. Now come back. So that's what we're looking for. Carrot goes back inside the range. See that right there? We've taken out these lows, reverse, body goes above, come back inside, look for this to go higher. If we close below this level again on the downside, look for this box here. And welcome to consolidations, beating the crap out of you. It can go either way, right? So for it to fail, it needs to drop below here, use that for support to take out these lows and start digging deeper into this range. And you're in the middle of the range. So if you want that to go higher, it needs to stay above or inside this fair value gap or this imbalance. See, now we're trading below it. Now we're back to here again. Bang. See that? Literally came down, stabbed the carrot, took it with it. It's a beautiful thing, man, when you see it. Said, I'm going lower. Snatch. Steal the carrot. The rabbit's on the run. Run back through it on the close. It's done its damage down here in Wicksville. Small range, discount array, premium array, right where the carrot is now. ICT earlier this year played NVIDIA pre-earnings and caught the entire gap. Do you think it's possible to consistently play pre-earnings to catch the gaps? Pre-earnings? I don't know anything about pre-earning stuff. I'll just tell you, look at the algorithm, look at the charts, look at this is pure technical analysis that we're doing here. This has nothing to do with fundamentals, pre-market stuff. I don't know any of that. I just look at price, every candle. I obsess over every candle, where they sit and where I'd like to see price move. So now we're hitting our little carrot here. See that right inside here? Carrots hit. So now I want to see, so we're literally in between these two right now, here and here. Find some support off this. See, look at that. Beautiful. Bing. After you knew it hit that, run through here. And I'd like to see that candle get taken to the upside now. Your long trade on NQ, did you raise your stop loss 50% after it hit 62? Yeah. Well, I didn't use the fib tool. I used my fail-safe. I don't always use my fib tool. I use fail-safe. And if there's no if I'm coming back inside a range that I look at, like this one that we looked at in oil, if you're looking at this and you're going, there is no fail safe I can put in here until that breaks that high, then I've got a fail safe in here. Otherwise, I'm using my fib tool inside this to run the range. So I ran that up there, would run that up there. And if it breaks that high on a close, you go, great. Now I can reset. Like I was telling you guys, you can reset if it breaks that high. It breaks that high. Now use this candle for support to go higher. Stop loss would be sitting just below, like in the lower part of this fair value gap, just a couple of ticks below that candle. And it comes back well inside it and runs higher. The upside objective I'd be aiming for is up here. So, and you even got to trade this little piece, make some money. Then you got to start the trade all over again, make a piece of run all the way up into here. Then you start a new trade all over again to run higher inside the bigger range. So there's multiple ways you could have made money inside that I've already showed you on a 1 minute chart, using the fib tool and using other things. So for my trade on NQ, which was right here, I got in at where was my entrance at 6:16, and it took me out at 6:32. So and it's all because I went 6:32. So 6:32 right here. So I looked at this and I was like, inside this range here, how much am I willing to give up of the potential for it to come all the way back down into this fair value gap here? And there's a little imbalance right here. I didn't want to see it start coming into that. It started coming down and took me out at 6:32. It's like, I don't want to see that close below that fair value gap. And it did pop me and then went, now I'm going higher. So if I wanted to get back in sync with that, I would wait for a high or a low to get taken. So if this high here got taken again, I could get back in sync with the market and continue running higher. And it did not take that high, but it did come back and take this low out and created another swing point. So I go, oh, I could have got back in here. So from 6:32 to 6:40, I could have been back in at 6:40 and continued running higher, and I would have been out by 8 pips or 8 handles and got back resync with the market. You see this reversal here. You go, I'm on the wrong side of this again. I'm out. It would have come back and taken me out right there. That's where my stop loss would have been, because that's where the fail safe is for me inside that range. It would have come all the way back in. Then you wait for, oh, lows have been taken. Do I have a chance for a reversal? Keeping in mind, we were talking about this with the carrot. We used the carrot in this option. It came through, hit the carrot, came back up to the carrot again. See, it eat all the way into there. Love it. Then you look for another reversal below these lows. It takes them out on a close right there, comes back up inside, and we're starting to run back deeper into our side objective. So that's trading it, staying on price action. So now if we trade below here, oh, you'd have to use this one here now. Ah, come on. Give me this guy right here. That's the next downside one. We take that candle, look for this, and look for a reversal again. If we close below this, look for these equal lows to get taken. Now we traded below that again. Run down. It's crazy ironic. I was long. Where was I long? Off of here. I got long off of this trade here. And my stop was sitting down just below this level here. It wicked down, forgot all about it. I was talking to you guys. I look over, I'm like, oh, I'm on the wrong side of this. So I just closed. My stop loss was sitting right in here. I thought, oh, this could run into here. And I literally closed it out right there, and it came back up. So I took a small loss from there to there, and it literally came back up. Now I'd be in profit right now. That's what you get when you don't monitor your trade. And you're too busy talking and you leave shit alone. That was my bad. And I just, instinct was like, oh shit, I'm on the wrong side of that. And it had to take out that low for that to start reaching into here. It did not take the low. So therefore, we took this low. I'm on the wrong side, and it came back through here on a close. Wrong side. I guess fair enough. I would have still taken it off there. And now it's going long again. So look for that order block there. Support now. Now I'm not doing any more trading. I've done 2 wins, 1 small loss. So I'm not doing any more trading on that. Look for support here. Up highs. You want to see this thing get taken out to the upside now. Playing earnings like this, gambler, looking for that one huge move that can tank your account. Yeah, exactly. If you're on the wrong side of that, especially if you're selling covered calls or you're selling calls, and you just get your ass handed to you if it runs in the wrong direction. I mean, not really. Earnings to me are just catalysts to send a specific ticker higher or lower to sweep. At least that's how I view them. It's just playing off some strange price. Every candle in the same range. The tricky part with earnings is not getting IV crushed. But if you can anticipate a move that's much larger than implied move, you won't get crushed. It's anticipation versus pure tech. To me, I'm a pure technical analyst or analysicist or investigator, whatever you want to look at it. Player. I have no fundamentals. I don't know anything about price, earnings, charts. I don't know who's running the company. I gather Elon Musk is still running it. I don't look at any of that. I go, where's the algorithm playing with this particular chart? And if it gaps up and you miss that, who cares? If it gaps up and it comes back to a level that you like, and you say, I get support of that, I'm out of here. All right, didn't get above here. I like that. Didn't take any higher. Reverse. Body trades below this, inside this range. 50% of the range has already been hit, back into that crazy little level we're looking for earlier today. And if we run down deeper, this little box here goes here. It's okay to have differences of opinion, you guys. Earnings are not so difficult and higher impact news drivers. Some lunch talk. How it was it learning from Mike back in 2016? Was it frustrating as it was taking time and never complete? How long it took to become profitable for you? Back in 2016, because I knew nothing about the markets, it was absolutely exciting listening to him. I loved his little tinfoil hats. I could listen to his tinfoil hat moments for hours. And I did, believe me. We did live as he's looking at charts. We're listening to him go on about where the world was going and what things were happening. It was exciting to listen to him because I had nobody else to compare him to. I truly went, wow, this guy's passionate, man. And then when he told his story about how he actually, where this all came from for him, it was a deeply emotional moment for him. And many people poke fun at him for that, but man, I gotta love it and respect the guy. He got a whole new level of respect from me the day he really confessed where it all came from, and he was very emotional about it. And some people may have been looking at it like, you're crazy, man. But I love the guy for it. And he's got my respect right from then. Not that that means anything to him, I'm sure, but I love it. And I look back on all that stuff now. I needed to learn the real basics, and yeah, he changed his little definitions here and there, but it doesn't change his overall strategy or his overall analysis of markets. So I love it. I think it's amazing. I got this box wrong. Sorry. This box should be right. There. There you go. Looking for the lows here now. See how we traded below that level, came back into it again and went lower. Trade back into it again, go lower. Take out that low. So yeah, there was never frustration because it was all new to me. So I got the chance to learn from a guy who was drawing boxes, and it would come into a box and then leave, and you'd be like, that's incredible. So you can woo people when you know what you're looking at, and it's so clear you can't unsee it. See, now we're back into a run back in here again. The low was taken. That candle's low right there is 640. This candle's low is 639.75. So 0.25 below that. And now we're back up above, using this to go higher and leverage, and you're looking back up in here inside the small range for lunch. So I loved everything that Michael did back then. I would have followed him. The moment my friend told me this guy was a genius, and I bought into it. It's a shame my friend quit. But I stayed with it, and I've stuck with it, and I've put in thousands of hours. And when I see something that has value, I obsess over it. It's a wonderful thing about ADHD. When you can become obsessive and become hyper-focused, you can use it to your advantage. And I didn't get really proficient at this for years and years and years. I would probably say in the last year, I've got more proficient at this. In the last 6 months, it's really clear to me where price is going. I've been calling this since I started doing this back in July of last year. But the proficiency and the clearness of it all has probably been really obvious to me in the last 6 months. And that's because I look at that's because I'm old. I'm almost 60 now, so it takes me a long time. Not like you young pups. This stuff's easier for you to understand. So that doesn't mean to say it's going to take you 8 years or 6 years or 7 years to get it. It just means the more you study it and the more you get people that are trading live with you. And Tanya Trades does this. I don't know if she trades on a 15-second chart and shows you every candle and lays out boxes like this. I know Michael doesn't lay out boxes like this, but look, I trade internal range liquidity. Some of those guys look for the big bombs. just stay on price action, man. I show you price, where it's acting, off of what, where it's going on a 15-second chart. And hopefully that helps you guys hone your skills at recognizing where price is going. Your model, whatever model it is that you're using, is now more comfortable, more solid for you. You feel less stressed because you got a better view on where price is coming to, and you don't feel that rush of cortisol and the dopamine hits when you. It's like Michael says, it's got to get to the point where it's boring, because once you see it, you cannot unsee it. I see it so clearly right now. I see it so clear. I go, okay, I'm on the wrong side. That's fine. I'll be back on the other side. How much would that have cost me if I had to buy that new information and it didn't run these lows out? Well, the moment it broke above that little fair value gap there and used it for leverage, I know I'm on the wrong side of it, get back in sync with it again, and that's my upside objective. So I'm there. I hit it. Good. I'm getting leverage off of the order block. Now I want to see this motor through this level and use it for support. And that little fair value gap that started this morning, I want to see that find some support at that and push higher. Otherwise, we're stuck in internal range liquidity. That one and that one. See how tight it's getting now? It's compressing. It's got to bust out of here. And why is it doing that? We're in lunch hour, man. I guess that's a very long explanation about where it was in 2016. I love Michael's stuff, and I've listened to all his videos. I'm up to like October 4th, because I took a break to go to Thailand. I'm up to October 4th for my videos. I still listen to his videos. I still get nuggets of information, and I say, can I still use this in what I'm doing in the mornings? And can it help you guys when he's not on? He's the guy you should be watching when he's on. And I appreciate you spending your time with me when he's not, because there are many people out there that are really good at trading. Yes, my love. You have to print this? Okay, go ahead. I'll turn my camera off. So she was always embarrassed. She doesn't want you guys seeing. Let me turn off my camera. There you go, lovey. Oh, you are? Good. All right. For you. Earnings are so different than high impact news. I had to enter based on a 1 minute chart. Once as we raised, I don't think I could ever get a carrot doing this. Nice, appreciate your time and sharing your experiences. How did you find ICT? D, I love ICT. I think it's crazy and fun. I've dealt with ADHD my whole life. How have you balanced that with your personal life and trading? Andrew, for ADHD, you know, the amazing thing is having someone like that. See you, love. I tell you, having somebody who's super patient, who deals with kids with ADHD, it's not till you're an adult and you've gone through your whole life not knowing that you had it, because it wasn't a thing when I was a kid. I was just one of those kids that didn't listen. I was super active. All I cared about was gym, recess, and chasing girls. I didn't care about anything else. I couldn't focus on anything. And it wasn't until I got into paramedic stuff that there was moments where I'd start to become hyper-focused on things, and I didn't realize what hyper-focus was. I just became obsessed with it. So I would make thousands, I kid you not, thousands. I'd take those 5x7 recipe cards, I'd split them in quarters, and I'd put one piece of information on one side, I'd flip it over, and I'd put the answer on the other side. And I'd make thousands. My pockets would be full of these things. So in between classes, I'd be sitting in the hallway, going through these cards, flashcards, studying, and I danced around because I was into acting, and I used that physical energy to learn how to. I studied Colin Rose and Brian Tracy's accelerated learning, and I learned about the 7 levels of the 7 intelligences in the human brain. And some people disagree with it, but I loved it. It worked for me. and you find out what intelligence you belong to, which one you're most active about. I was good in martial arts, so I was good in body physical stuff. So knew I had to get up and move when I studied. So I had a group in paramedic school, and we used to sit around. We were called the residents because we used to sit around after school. We'd pack lunch on weekends, go to the campus, and study flashcards. And I'd dance around. I'd act out like I was this macrophage, and I'd pull my sleeves over my arm and I go, I'm a macrophage, and I'm moving through the cells, and I'm blah, 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 I'm eating, looking for bacteria. Right? My friends would be laughing their heads off because I'd use my acting skills from when I was in acting at in university, and I didn't care. Kids would be changing class, and I'd be like, well, I'd be acting out stuff because for me it locked into my head easier. So it wasn't until I started learning more about ADHD that I realized that, hey, it's a superpower, man. It's a superpower. Sometimes your mind, I can't have two things going on at one time. Like I cannot hear music playing and focus on something or I'm talking to you and somebody else is talking. I completely lose my words, and my mind's over here listening to that conversation, and I'm trying to focus on this conversation. I hyper focus, whereas I know a lot of ADHD people can focus on tons of different things and have no problem doing them. Me, I'm a hyper focus kind of guy, or no focus at all, or I can't focus on anything because I'm bored stiff or I need to move around. And you'll see me when I get super excited, I go fast, I speak fast. Craig said to me many times, could you say that slower? So I get super excited about something, and then I start to race out of control. But you find somebody who truly can appreciate or has patience with you to manage your ADHD, and sees it as a superpower, and doesn't judge you based on that. Oh, dude, I tell you, it is an amazing thing to have somebody who's patient and cares and supports that. And she'll go, okay, can I just get your attention for a second? Can you just focus on me for a second? I don't take it personally. I just go, oh yeah, I'm all over the place. She sees that and she goes, and I go, okay, so, and she's calmly explains things. And I love that about her. I love that about her. And a lot of people don't. They just see how we found support off of this here. We went through it, came back in, found support at it, continue going lower. And now we're looking, see how these levels, we went from premium back into discount, ran back up, got support off that candle, ran back up into the premium level, bounced off of it, ran back through this, into it, one more time, and then went lower. These are key levels, you guys. So Andrew, I can appreciate you having ADHD, man. You're not alone, brother. You're not alone. When you hyper focus, I need time. Like when I hyper focused on things, I've done so many things in my short little life. I've got certificates up to yin yang till my ex burned them, but I have a huge chunk of certificates. I have neurolinguistic programming instructor certification. I have hypnosis instructor certification. Martial arts, I did martial arts for a whole bunch of years. I was in multiple different martial arts, Northern Shaolin Kung Fu. I was in Shotokan Karate, Wado Kai Karate. Loved all that stuff because it's really body physical. All my paramedic stuff, my paramedic certification, I got advanced cardiac life support instructor level. I got instructor level in firefighting. When I hyper focus on something like this, I know I'm going to get it. It's going to take me, if it takes me years, I don't care. I absolutely obsess over it. When my wife goes for a pee, I run in here and I look at charts. If my wife gets on the phone, I run in here and I look at charts. Now, that's not to say you should be doing that, but that's obsessive hyper focus. And then when I'm finished on a Friday, she's going to try and calm me down because I'm just amped up after being with you guys all week. I'm like, yeah, that was fun. That was fun. And then on Sundays, I'm like, I'm antsy again because my focus is I got to get back there, got to get back there, got to get back there. And she's helping me get to the point where I can just go, oh, you can just kind of rest. And I've got some PTSD from the work that I did for 30 some odd years. So I get triggered by things and the trauma that I had. If I just bump into something unexpectedly, I get rage. I get super angry. I don't hit anything, but I swear and curse at inanimate objects that touch me, and I wasn't expecting it because my brain is hooked on that whole. I smashed my head into that steel I-beam and had such a huge trauma in my body to wake up paralyzed and you can't move your arms, and then you start to feel your arms coming back and the burning. It's like someone's poured your arms, soaked your arms in gasoline and lit them on fire. Neurological pain is unbelievable. But then I could start to move my fingers, but the burning was insane. And then I had this central spinal cord syndrome, which affects your arms and not your legs. So your arms get paralyzed, but not your legs. That's what happens with a central spinal cord injury. But luckily I got my arms back. The Germans came and did some retrofitting and fixed me up. So yeah, I've done tons of different jobs, tons of exciting things. So sorry, there's an ADHD answer for you. And that, you know, we've scrolled through a whole bunch of information. So Andrew, I'm sorry, I rather long, lengthy explanation. It's my wife helps me develop balance. It truly is when you have a person in your corner that supports you, and you don't sit there and judge yourself. As I don't know how much negative self-talk I used to say to myself all the time. I'm bad, I'm terrible, because I'd recognize that I'm not like everybody else, right? So I would be I'd beat myself up, a lot of negative self-talk. Then when you get into neurolinguistic programming, you hear about what you say to yourself is just as important as what you feed yourself. So if you call yourself bad, you look for something bad, you're going to get more of what you don't want. So there's this order block here. Find support at this here now. My dad has it too, and he struggles in life a ton with it. Andrew, we should all get together and have a chat. That'd be all great. We'll have coffee and just start talking about all the things we obsess over. Russell, see you, Darren. Have a great weekend. See you, Russell. Pepe, so about these boxes, are they inefficiencies? I think they're to me personally, I think they're reference points. They're not inefficiencies in that we see these get traded through how many times today? Look at how many times that was traded through. Is it inefficient? Absolutely not. This has been efficiently buy side, sell side. Michael will consider that a balanced price range. So for me, it's a data point. It's a reference point that the algorithm will reference before going higher or lower. So it's literally the mathematical data point it's trying to key off of to go higher or lower. That's how I look at it. Whether Michael it can explain that more in depth or give you a cleaner definition for that, you'd have to ask him. But for me, it's just a mathematical data point for reference. So we call it this one. Hit it. See how it's acting off of it. Sometimes breakers as well. Wouldn't expect any other kind of answer from a fellow dear. Thanks, buddy. Appreciate it, Andrew. Watch this in here now. You're here and here. Those are the two levels inside the range you're in here now. You're into a discount inside this range, which is back into order block all the way from here to here. That whole thing, those two candles you take into consideration. Now you wouldn't want to see it get below that low right there. It's 633. Otherwise, we're back inside this range looking at this candle and that little fair value gap below you here. This is practicing staying on the chart. See how it traded below it? Zipped into this consequent encroachment of this fair value gap here. And you're always drawing these things out and you're watching how price acts off of them. And you want to see if they bounce off them, start running through the old highs, start getting through this guy here again. So the upside one inside the range you're in is here to here. See how we hit the top of it? So you're banging around inside that right now. I think that's going to be it for me for today. I think I'm going to go out for a walk. Do you notice, Andrew, sometimes when you're running on high octane focus, you just go, okay, I'm done. I can feel myself going, spinning off and bouncing off a wall, come back, trying to focus again, and then bounce off, go, okay, I've had enough. So that's inside that fair value gap. Now you want to see how we act inside here or upside there to see if the range extends back into the higher range or whether or not this range continues to extend down lower. I'll go through this one more time and give you my views, and then on the weekend, if I've got some time, I'll be on the road this weekend. I'm going to see my parents. So I'm going on the weekend. So next week I'll be checking you guys, chatting with you guys from Manitoba in Canada, more in the middle of our country. I can take this puppy on the road. See, I trade above it. Boop, give it a little kiss. Up you go. Take the high. We'll be coming back inside that range now. Look for this order block here. If you do, come back, give that a kiss, run all the way through, tap this right there. Go back higher. Order block. Full on all the way down into this order block here. Gap. See how we change on the other side of it? Tap it. Back to here again. Cleared out that high. Take out these guys. Quick little seek and destroy inside that little range. Pop up. You see it used this to go lower. Accelerate. Take that guy out with a wick. Now, do we come down to here and pop through and take that guy out as well? Extend the range one more time. Or do we start running back up here and taking out relative equal highs above you? So stay inside price action study, man. That's what we're up to trying to do right now. So there's your downside. Minimum. Bam. Hit it. Just got to rejection block. Opened on it. See that? We gap down, opened on it. Come back in, give it our kiss, and start running lower. We haven't actually closed below it yet. So you'd want to see it close below that. If not, it will come back inside that range again. So we're back to, yeah, we'd have to say that one. It can come all the way up, and this box can drag down to here. And this one is still in place. So these two are almost overlapping each other now. Well, no, they are. It comes down and includes that imbalance as well. So that's talking about how the algorithm kind of bounces around and starts to run out of arrays and has to extend them. That's the premium array inside here. And this whole range here now, here, and the lower one is here. It's got to run through here, or it's going to drop down with a body below here to go lower. And it's going, I'm inside here, so they got this upside PD array in here. See that right there? There's the upside one here inside that big box fair value gap. You want to see it close above that, come back in, find support at that, and run higher. If not, it's just come back up to that imbalance and roll over. We got another little guy right here. So you see how it's compressing, getting smaller and smaller. There's one right here, one right here, one right here. Watch those key levels and how it bounces off of them. Sorry, I'll go through this one more time. See it? Hit our level in Bitcoin. So on the weekend, I'll see if I can get studying Bitcoin. See how easily distracted I am. I started that conversation and then quickly went somewhere else. The Bitcoin. I'll come into Bitcoin and do some Bitcoin practicing and trading with you guys in the weekend. I'll put the charts up higher on Telegram. So if you're on our Telegram channel, that's usually where I do it. I don't do a live show, but I will be on Telegram live, and I will be posting charts on what I'm looking at for Bitcoin. Not that you're looking to make money at it, but if you want to practice with us, sometimes Dave and the boys come down and we do a bit of practicing in Bitcoin for just to stay frosty with this stuff. And yes, you still practice on 1 minute charts. No matter how good you get, you got to stay frosty, man. So that's what I do on the weekend. So I've got nothing really for you until we can break below these lows with the body of the candle. Otherwise, we're still in this little consolidation that I like. We come back, find support off this roll and take these lows. I'm looking down here for a downside. And if we take these lows, then we're coming back into this range here. ES, man, ES gave us a beautiful reversal here. And you're just flipping coupons right now. So ES, we get a retracement back up into this consolidation area here. These relative equal lows. If we get a retracement back up into that, and that candle does not get taken to the upside, I'd like to see that continue going lower. And my downside box would be 586.3 to 586.2 down here. We're still looking for natural gas to go higher. Copper, it's sitting fat right now. That's good. That would be perfect for it to stay there today. A Monday, open, gap down, give it a little kiss, give us an institutional order flow entry drill to run higher inside the range. It would have to be a nice little discount area below 50% for that. Crude oil on the way back up again, just banging around, working its way arduously up higher. I like that. Keep going. We traded all the way back up. Now we're sitting back in that. Again, we're back to that fair value gap daily, doing a whole lot of nothing. We just came back inside this fair value gap here, filled it. I want to see if that goes higher now. Higher or lower. This gives the next price leg down. We have to start breaking this candle's low on the downside before we consider going lower there. Wheat, still looking for downside objective in wheat. And sugar sitting fat right now on here. We're inside this range, so we're using this to hopefully find support. That gap, you want to see it stay open if you're bullish. This rolls over here now and starts to dig down into that, use the downside to go lower. Coffee leg is still in play, and look at that. We wanted to see this happen. So live cattle, if you caught the reversal anywhere, I was talking about this morning, anywhere inside here you catch a reversal for long, that'd be sweet. Or we're looking for a Tuesday to reach into there. If Monday opens and Tuesday comes down and kisses this midpoint, or half that wick would even to say, old high would be beautiful for a nice continuation. And if you dig down in here today, look for the swing point on this last hour or so. I feel myself going in there out of curiosity now to see. Let's have a look. So today we're looking for that return back into that level. And we have a return here. Look for this order block to get taken. The body closes above it right here, comes back inside it, finds support, push higher, reversal. If you waited for this market structure to break to the upside, here, body trades above it, comes all the way back inside it right here, does not get a body trade below it, and then we run higher, taking out old highs, and we're going higher still. So to me, if we lose this candle on the downside, then we're coming back into that range. Otherwise, this candle's support right now looks really good for higher prices. So that's cattle. Still looking for Coca-Cola. For cocoa to get down here. Breaker still holding price. Got to get above here. Displacement candle. Use this consolidation to go higher. Lean piggies. We found that fair value gap to find support. Ran up to it. Now we wanted to see it get through here on the downside. Trade back into it and go lower. It's not. So we're going bullish again. See where that ends up today. If we close up above this level, look for that to be a level of support to go higher still. Gold. Upside objective here still for gold. You found support off this old high. That's nice. Now you want to see that push higher still into that range and then start digging up into these boxes. So those are my boxes for okay. I could obsess over that. The stubborn side of me just says, I am not going to raise that. I'm going to find that spot in there. It's like, these people don't want to see you wrestling with that stupid chart. Yeah, anyway, so those are upside objectives. So it wouldn't be till I see the downside inside here get taken to the downside that I'd start looking about internal range again. Otherwise, we're still upside in gold. Consolidating in oil on a 1 minute chart. You see how we're up in the premium area here. If you want to go even more premium, you better hope that that side it gets taken to the upside and then find support off of that. You're paying a premium to want to go more premium. Move to the sidelines and wait. Your reversal was down here, what we were talking about. Once, twice. Run back up inside the liquidity above the market. And then you could roll over and come back down inside that range again. So I wouldn't touch oil anymore for the rest of the week, the rest of the day. Swissy, still looking to try and get up on top of that level. 50% of that wick seems to be holding price right now. NQ, we did not get our institutional order flow entry. So it just rolled over and it's coming back down now. Tesla, GBP. Is there anything else you guys want me to look at over here before I close that out? Yep, tends to be when my bad trading starts. Thanks a lot, Darren. I'll replay the whole video to really comprehend all this knowledge gems you're providing us. Thank you very much, Darren. Thank you, Darren. You're welcome. You're welcome. You're welcome. Nobody else wants anything else in here? Give me a quick peek at before I go. My wife's still got another half hour downstairs. You got me for another half hour if you need it. See how these all been giving away price? Trade below it. Here's your consolidation. You trade below it right here. Cam 1 model for a short. Look at that. Holy crap. It's a nice little cam model short there. Who's doing cam model stuff? If you haven't studied my cam model entry stuff, it's actually Michael's cam model 1 and 2. 3 is mine, but 1 and 2. Watch that for a continuation on the downside. That's a beautiful cam model. Cam model people, if that's your model, you're giggling to yourself right now on the way down. So yeah, that's a lovely little run. That's a 15-second chart, by the way. Was there anything on a 1 minute chart that gave you that? Nope. You didn't get it on a 1 minute chart. Look for this candle here when it takes it on the downside. It does right there. What does it do? Trades back into it right there. Lovely on a 1 minute candle. You would have continued on your short there, looking for a return back into 50% of that candle there. I stay later than usual since TLM is weekend. Thank you for your live, Darren. Hope you have a great weekend with your parents. Thank you very much, Curry Fish Ball. All right, I'm out of here. Love you guys. Thank you so much for your time. The usual. I'm sincerely thank you for your time. I am deeply honored to spend time with you guys. Thank you for sharing the time. Thank you for keeping this clean and happy and drama free. That's what I want for you guys, and I want that for all of us. And I will see you guys bright and early on Monday. I'll do only a couple of hours on Monday because I'll be with at my brother's place. So I want to spend time with family. So I'm not going to spend a lot of time in here. So you'll only catch me for a few hours on Monday. It's another 1 hour time zone that way. So I'll be starting I might actually start early if I'm used to being up at 6 in the morning. If I get up at 6 in the morning there, it will be 8 o'clock. I'll let you know. Look at the Telegram. I'll let you know when I get on there. If not, have a wonderful weekend. I wish you guys all the best. Please be safe out there. And promise me you'll take care of you, and I'll take care of me. And I'll see you guys on Monday. Thanks very much for showing up, tuning in. And I'll see you. If you haven't liked it, hit the like button. If you'd like to subscribe, we're more than happy to have you part of our community. And I'll see you Monday.